I personally don't invest my money in companies that have directors that have consulting agreements. So if I see a board member of a junior exploration company makes 50,000, I'm very unlikely to buy the stock. There's a line here called market awareness. $4,398,000. So they spent $4,398,000 to raise $4,751,000. So then I go, who benefited from from that, right? When I got into this business, the fax machine was not invented. So that's how far back I go. Please read the financial statements. Please read the disclosure documents. They make investment decisions based on a couple of holes, right? But that's okay. That's called gambling.
All right, I've got with me Alain Lambert, who is he's currently the CEO of Prismo Metals, and fair disclaimer on his confession. I have exposure to Prismo shares myself, and Prismo is a paying client of Resource Talk, so everything in here we should be considered biased on. But why I have Alain here, and Alain, actually, I can speak to you, I suppose, but you and I were talking about the venture capital space as a whole briefly a couple of weeks ago or a couple of months ago when I met you in Germany. And you told me that you've basically seen it all in your what is it now, over 35 years of career that you have in venture capital as a lawyer, most of which on the sell side of things, if I could call it that. So it's essentially helping issuers raise capital, which to me, when you told me that, I thought like, okay, this guy must have seen the whole suite of people in our space, from bankers to bloggers. And so what I want to talk to you about today are a bunch of stuff, really, but primarily stuff like red flags that you've seen out there in generally the corporate world. And then we might touch upon geology later on as well. But so how do you recognize red flags within the people who you work with and the people who you put your name behind? Because everyone I interview always tells me, management's important. You want good management, but rarely do I get specific instructions or specific tips or whatever about how do I know when a management team is good, or how do I know when a management team has got red flags? And I must have interviewed over 100 executives over the last couple of months, and they all tell me they have good teams. They all tell me they're good, but that's just not possible for that to be the case at all times, all the time, right? So, talk to me. How do I judge management teams?
So, if you look at the exploration scene in Canada, it invites, as part of the management team, all sorts of different people. So I think the first thing that retail investors need to do is, when it comes to judging management teams, they absolutely need to look at what the background of the various officers of the company are. What's their background? And then once you know what their background is, you look at their track record. And what I mean by background is I'll give you, let's say, two extremes, right? So you can have a junior exploration company that's put together by a pure stock promoter, and we have a lot of that, and we can, dive into it a little bit more later. And so that that this company is going to be run a certain way. And what I mean by that is it's going to be run with a way of that will involve probably a lot of promotion, probably some kind of share structure that favors the shareholders over the company. And at the other extreme, you can have geologists, which are very talented. And we see it all the time, where you can have somebody that's been with a major for 20 years. They start their own company, but they're pure geologists. And maybe they don't necessarily have the capital markets experience. So I'm a firm believer that you need the right balance between strong technical teams and investor relations, capital markets. So that's the first thing. So you establish who you're dealing with. What's the background of the people? And then after that, you look at the track record, and you try to assess the ability of those managers to move a mining project forward, and to also know how to communicate properly with the market. So those are the two main things. And in order, and then you got to vet these people. You got to ask around You got to talk to your friends. You got to talk to your broker. There are great sites like co.ca where you can go and find out of what other projects the people that you're intending to invest your money with, because that's what you're doing. If you buy the stock, you're investing your money with these people, and what have they done in the past?
Right. And you make a very good and an important point there, specifically about the board, because I don't think people care too much about boards. I had it in my notes here. I mean, I still have it in my notes here that I want to talk to you about that, because in my opinion, it's a mistake not to care about the board of directors, not go look at it and try to figure out who they are. Um, that's actually, I'm mostly saying that because I recently got burned by a rogue board member myself. But so, um, let's not go into that. It's going to get too painful. But talk to me more about that. What does the perfect board of directors look like, in your opinion?
So, first thing I'll say is that I agree with you. People don't talk about the board as much as they should, right? And retail investors maybe sometimes have a misconception of the role of the board. What's the board there for? Well, the board is its own entity that's quite different um, than the management team. The board is there to look after the best interest of the shareholders. Full stop. And so how do they do that? Well, they get to pick the CEO, they get to pick the CFO, and maybe some other senior executives, and they have the final say on anything that's material. So you one big red flag comes to mind that people need to keep in mind is that you should be very careful investing in companies that have directors that have consulting agreements with the company.
Hmm.
Why do I say that? It's because, well, they're not directors then, right? There's an inherent conflict between being a consultant and being a director. The director should not have a conflict. He should just look after the interests of the public shareholders. If he's a consultant, then it comes to mind that he'd like to retain that income stream. And so I personally don't invest my money in companies that have uh, directors that have consulting agreements. You know, you can have sometimes a lawyer and he's on the board and his firm does some of the legal. You know, it's not ideal, but you can wrap your head around it. So that's the first thing. So the composition of the board. So you need a diverse board. So you need the first and foremost, and the securities rules say it. You need independent directors. So people who don't have a conflict, um, and will look at all in all instances only with the view of making the right decisions for the best interests of the shareholders. So if you look at in our case, we have a very large shareholder at Prismo, so we have one of their representative on our board. We have a past regulator on our board. We have people with very strong counting background. So I would not necessarily view um, a board more favorably if it had geos on it, because I assume that if you have the right management team that's comprised of the right geos, then there lies your expertise. What I look for are people who have diverse backgrounds, who will be sort of a counterweight to management decision and will look at things maybe differently. You will see very often, though, that if you look at the background of some directors, people will be on, I don't know, 5, 6, 7, 8 boards. I think that's too many. I don't know how people have the time to do this. So I would look for diverse boards, not necessarily strong technical expertise, and
Well,
people
and
who are not conflicted.
that's interesting. That's an interesting point. I don't agree with it, because I do like having geologists on the board, ideally two, actually. So an older one and a younger guy, new ideas and stuff like. But um, we're not here to listen to me. Why don't you want to have, like, well, what's the issue with having geos on the board?
So here's another thing. So you raise a great point, Antonio. So the right board of directors should not, call it, interfere into management's decisions, day-to-day decisions. So I would say if a board of director decides to get involved in what hole should be drilled, then I'd be likely to sell my stock because I would see this as a dysfunction. What I would like to see is a board that is presented an overall exploration plan by management, and that exploration plan should have detailed budgets attached to it, and you have a well-known exploration plan. Now, if there is somebody on the board that has technical abilities, experience, then it'd be great for the CEO or the VP exploration to call that person and interact and seek that expertise. But I would see that as not necessarily a formal through a formal board function. Because at the end of the day, think about it, Antonio, the number one thing that a board can do is pick the right CEO, right? So that's their primary function. And so if they start meddling into how the company should operate, it would mean to me that they're starting to lose faith in the CEO, and that becomes a big issue.
Yeah, sure. But how often, like how oftentimes you're going to see that the CEO is on the board as well, though, right? What do you think about that?
Oh yeah, um, so yes, the CEO should be a board member. Now I don't think the CFO should be a board member. I don't think the VPX should be a board member. And why is that? Well, because these people report to the CEO, and it's tough for the CEO to express himself in a public setting against these people if he feels that a change should be made with respect to these two functions, CFO and VPX. But yes, I completely agree the CEO should be on the board.
Yeah, that's fair. No, I can agree with that part. I can agree with you there. Sure. You just said something else though that I made a note here at the beginning kind of your explanation. I want to go back to that, but multiple board positions at the same time, right? And it's no secret. Ours is one of the spaces that suffers from career board members a lot. Those are essentially people who would they've never really done anything but sat on boards and sit on boards, as in they sit on like 7-10 boards at the same time. They get maybe a small-ish paycheck on a per company basis. They get like say 20 or 30 grand or something like that, and then a bunch of options. But then you count that up, and then that's a lot of money for doing nothing, which actually I'm good at. So maybe I should consider becoming career board member myself. But so yeah, how many boards, Alain, is too many boards to be on?
Right. Well, too many boards it'd be a function of what the daily activities of the board member is, right? So, as an example, if a certain board member is the CEO of two public companies, then I would say he doesn't have time for anything else. If the person is retired, as an example, and we see this all the time on large Canadian boards, be it the airlines or the banks, telecom companies. You have retired executive that have boards as their primary business activity. So if somebody is retired and he's got, I don't know, 4 boards of juniors, I think that's adequate. And as I said, if the person's CEO of a public company and he wants to be on a board of maybe one other as an independent board, then that's where I'd pull it off at one.
But yeah, we might get back to that actually. But how many, in terms of CEOs, what do you say? Like the 2 companies is too many companies to lead at the same time, or what's too many?
I would say so, Antonio. I mean, now keep in mind that the in the junior exploration companies, there are things to keep in mind. One is maybe the company can't drill all year long, right? So maybe they have a very seasonal exploration um, uh, period, and so so it's CEO being a full-time job on a small company. Maybe not. And so I wouldn't be criticizing someone too harshly if that's the case. Now, that takes us down the road of how should CEOs and management be compensated, and that's a slippery road, and it gets us into sort of the lifestyle exploration companies, and I'm sure you've heard that.
Well, you're not wrong there. I have unfortunately more than heard about it. I was in direct contact there just recently, as I was saying. But I do want to go that route. Actually, I know it might piss some people off, unfortunately, to talk about what a good comp package is or not. But before we get into that, it might actually be worth discussing what you guys or what board members actually get paid for. Like, what does a board member even do? I mean, you just mentioned the daily activities of board members? You mentioned that those words, daily activities. Is that even a thing? I mean, like, do board members do they wake up, open a computer, and start working about it on a company on a daily basis? Is that a thing?
No, that's right. Well, that's a great question again because it demystifies the role of a board member. So the think about anything that is material that happens with a public company, and are actually the exchanges have their own lists. Let's say, no matter what you think about um, materiality, we deem these things to be material. So grant of options uh, to insiders, issuance of shares, and so on and so forth. Right. So the role of a director is really not a daily role. It's quarterly involvement on reviewing and approving financial statements, and in between periods, reviewing the strategic plan, the budget for the company, the exploration plan, and I think there should be comprehensive quarterly updates, and then in between updates to the board, and any change in the strategic plan of the company or its exploration plan should be approved by the board. Any changes in the budget should be approved by the board. And then you have these ad hoc things where suddenly a CEO says, I'd like to issue options or share appreciation rights or restricted stock units to employees. Then there should be a board meeting called. The directors should insist that material be distributed to them several days ahead of time. I've been on boards where you basically get the information the day of. I would not want to be on a board where that happens. So if we, like in our case, and in the companies I've been involved in, if they're the one thing you need to do is as a board is to approve a yearly budget. And so you need to, as a board member, receive that budget, I don't know, a week before the board meeting, so that you have time to read it, you have time to understand it, you have time to talk to the other members, you have time to talk to management, so that when you get to the board meeting, it's not like rubber stamp it because nobody's really had a chance to look at it. So you have to play an active role, but it's not a daily role. As for compensation, directors basically, the structure, and it varies depending on the size of the company, but they should have options or restricted stock units. If they're going to get paid, as I said, you're not entitled to consulting agreements. I'm a push back very hard on that. So if there is a cash component, then it should be a per meeting fee, and for a junior exploration company, it's probably $500. So if you look at 6 meetings over the course of the year, that's $3,000. You might want to give a little retainer to the head of the audit committee, and maybe that's $5,000 for the year. So he'll make eight. But anything that looks quite different than that. I'm talking junior exploration, but anything that looks substantially different than that would be a big red flag.
Right, but so not 50,000 then.
The problem, Antonio, is there not $50,000 worth of work to do. That's right. So no. So if I see a board member of a junior exploration company makes 50,000, I'm very unlikely to buy the stock. So think about it. Think about it in those terms, right? So you have to pay. People need to be paid for the value that they bring. And if anybody dives down and look at what real companies pay their directors and how the pay is structured, they will find sometimes an annual retainer for the big positions like audit committee, per meeting fee, and then some incentive stock options or restricted stock units.
Yeah, I get. Well, I never thought about it on a per meeting basis, but that does make sense, I guess. Especially the options part. Actually, I prefer no cash compensation for board members, but just load them up with options. Of course, I don't have the full picture and I'm inexperienced, so maybe it changes. And if I do eventually consider that career as a board member, I might want to have some cash payment. So I should be careful what I say. I'm joking, of course, but that's not. It's not always possible for management. Actually, is most of the times it's impossible, right? Which is it's a different story than board members. And as I said, it is the route that I want to take this conversation in a subject sure enough to piss off some people, but and they should send me an email, by the way, if someone feels pissed off, or you just want to talk to me about whatever. It's Antonio@resourcetalks.com. I'll send me an email. I'll get you on an interview to explain to me why you're pissed off. I don't mind those conversations at all. But so yeah, you mentioned the word overpaid. That's what I wrote down here, Alain. What's that? Like, how much is too much for management to get paid?
Oh gosh. So here's how the typical junior exploration company is set up. First thing they do is they get an office. Let's say I'm in Vancouver, so I'll use Vancouver as an example. So you get an office in Vancouver, so you got rent, and maybe you have a receptionist, so then you got that first salary, and then you have the CEO who says, "Well, you know what, I live in a very expensive city, so maybe I should make $350,000 a year. Mm. Then I need a VPX, and that's going to be 250. And then they say, well, let's not forget the CFO, and that's let's say 220, and so on and so forth. So before any money gets spent into the ground, you look at a structure where the costs are, call it $750,000 to $1.5 million. And and let's round it up to $1 million. So if the company is public, let's say for 5 years, that's $5 million of transfer of wealth from public shareholders to the insiders. And I see it all the time. And I see companies that have, let's say, exploration season that's seasonal. And let's say it's 6 months, but they get paid for 12 months. And I always wonder what these people do the other 6 months that warrant their pay, right? So if you're a CEO and there's 6 months and he makes 350 and there's 6 months of actual work, then he's making 750. So there was this great interview I saw, and it was Michael Gray from Agentis who raised the point, and although I knew that point, but he did say every January 1st, before you get into the office for the first day of work, you better make sure you got 750 to $1.5 million in the bank just for the overheads. So if you look at our company, we pride ourselves to say there's no fixed salary. And then people say, well, how do you make money? Well, make money the old-fashioned way. You work and you get paid, right? So Steve, who you interviewed, who's president of Prismo, he spent 7 days at Hot Breccia doing actual geological work. and he has a daily rate. He's a professional geologist, so he'll send a bill for that. But uh, that's that's the way we're structured, and every management function at our company is structured that way. And then you look at our share structure and you say, oh, okay, well, these guys only have 53 million shares um, uh, outstanding after being public for 4 years. And they go, well, how did that happen? Well, because we didn't have all this transfer of wealth from small investors to ourselves. And we still own 27.5% of the company. So what I'm saying is that management of public companies, of these junior exploration companies, I think you need to look for a not egregious salaries and big overhead costs, but you need these CEOs and other senior management to have a meaningful share position in their company. And I'm not talking, half a penny stock with options and warrants and the whole bit. So you really have to look at things the old-fashioned way, and it's what I call the alignment of interest. So that your interest is aligned with the interest of management and vice versa. If the CEO makes $350,000 a year and he can only explore for 6 months a year, then the alignment of interest is not there, right? It's the the interest is in great part in favor of the management team, where they get your money in order to pay themselves.
Yeah, sure, and that makes sense. But what does that mean for you specifically? Like, and I mean you, Alain. Like, how much money are you going to make this year? Because while I do agree with the structure of only getting paid for the amount of work you actually do, I'm not going to laugh about that. But what if that ends up being 300,000, 350,000? That's still a lot of money, like too much money, really, right, for a small junior.
So you'll see our information circular go out in the next few days, and you'll get the those numbers, but more precisely, and you'll see that it's very low. But so let me answer your question like this: Could let's say Steve Robertson make $300,000 at Prismo? Of course he can, right? But he can do that by working and doing geological work and charging the company for it, right? So we will have a drilling campaign coming up at Hot Bradshaw. We have a drilling campaign at Palos Verdes. So it will require management to be on site most of the time. So any day that they spend on site, they're going to charge the company. And so what I'm saying is I'm saying two things. One is it's a flexible arrangement. So if we want to pull back on expenditures, we can, because we don't have fixed obligation. The other thing that I'm saying, Antonio, is that the vast majority of their work, almost 90% plus, is directly related to exploration. So dollars on the ground, because that's what they charge for. They might charge a day or two because we're all going to PDAC as an example, right? But PDAC is once a year. But so Craig Gibson, our chief exploration officer, and Steve, our president, have the ability to make a good living, but they're being paid for doing geological work.
Right. Okay. Sure. So at 800 a day, you basically have to work like 440 days of the year to get that. Is that right? Yeah, 440 days of the year to get at 800 to get that much. Which, I hope it's not going to happen. Maybe he's doing double days. He's got to teach me how to do that. But so he's probably closer to 160 or something like that, 150, maybe 200, depending sort of that range, which is still a decent chunk of money, Canadian dollars, that is, but still a lot, right? But yeah. Anyways, Prismo side, you've been kind of political so far. I feel like you've trying to stay decent and manage your words. I get that you have to be careful about what you say publicly, of course, but give me Give me something spicy, like something more egregious that you've come across in your career historically or now within the stuff that you're looking for. Talk to me about that.
Yeah, you know what? So let's start high level, and I printed something here for you that's spicy. I'm not going to give the company name if you don't mind. I'll sort of give it away in a sense, but so let's there's a lot here to unpack. There are two big parts. The one is um, the very large investor relations budgets, and then there's the share structure. Let's start with the spicy part of the investor relations budget. More and more public companies listed on the TSXV and the CSC have to disclose investor relations arrangements. And you'll be familiar, you'll have seen companies announce that they have $250,000 US campaign, and they'll be spent in the next month, or 500,000 or 1 million. And so you've got this mining company that announces that they'll be spending money on promoting their stock um, in the short term. So you have to ask yourself, well, okay, who am I investing with? Well, I'm obviously not investing um, with an explorer, right? I'm investing with a management team that might be very savvy in promoting and moving their stock. So that's one investment decision. I'm that's not my game. I rarely play that, but in some cases it's kind of easy money because they tell you ahead of time that they're going to be promoting your stock. So if it works, then you can make a few pennies. But the reverse is true. So if that doesn't work, you might lose a few pennies. So that's the first thing. And for the juicy stuff here, so there's a company. They're headquartered in Vancouver. They've got lithium properties in Ontario and down south. So I'm looking at their financial statements. So for the audited financial statements. So for the year ended December 31st, 2023, there's a line here called market awareness, $4,398,000. So then you could say, well, somebody would say, well, if they raised 20 million bucks, that was a good investment. Okay, well, look at how much they raised. So they spent 4,398,000 to raise 4,751,000. So then I go, who benefited from from that, right? Clearly not the company, right? Somebody, there was a reason why they spent almost 4.4 million. And then the kicker here is that they spend 4.4 million on promotion, and they invested, looking at his financial statements here, 2.3 million in the ground. Right? So that's an extreme juicy example of what am I investing in? And then in that case, you people were investing in a promotional machine. And although they they call themselves an exploration company, I would take objection to that. But so that's one extreme example. And but then that that leads to the question: should companies invest in promoting themselves? And I say the answer is absolutely. We're in a market that's where capital is difficult to come by, and I think that junior exploration companies should be marketing themselves extensively. But the thing is, how should they do that? How much should the budget be? And I think if you do things the old-fashioned way, like guys like me do, you can do it quite inexpensively, and you tell your story over time, and you try to get results over time, not overnight. So as you know, so we're spending time talking to you. Why do we talk to Antonio? Well, because we think we have something to say as a company, and we hope that people who listen to your channel will learn something. And it's quite irrelevant to us if they buy the stock tomorrow morning or in a month or in 6 months, right? What we want to do is tell what we think is a compelling story and educate investors over the long term. And that's what investor relations should be focused on. Gaining investors, keeping them informed of your development, and not try to create a false trading pattern that's fueled by very large short-term expenditures.
Yeah, that right there is where I want to go with this this whole thing, because we're talking about management here and them getting paid based on the amount of work that they do, and part of that work, one of the main important parts of their job is to keep the company well capitalized, finance it well, basically, and not only make sure that they have enough money, but do it in a proper way where it's not too much dilution and whatnot. But they all tell me the same thing, right? They all say, oh, we're experienced in capital raising. We've got 150 years of combined capital raising experience, and we've raised $17 trillion combined. And they will make it seem like they'll always do a good job of raising capital. And then you kind of stop thinking about it, I suppose, or at least I used to be that way when I was first getting into the space. I stopped thinking about capital raises, stuff like that. But needless to say, they don't always, well, most of the times, really, they don't do a good job of raising capital. So how do you judge that, Alain, upfront before putting money with that management team? Can you I don't know, see it in their eyes because you have that much experience? Like, how do you deal with that?
So I go back to the two extremes, right? So one is the promoter on one side and his short-term IR budget, and I got the pure geo on the other side, and a good project, good technically. So they're two different sales pitch, and then there's something in between which I'll talk about here in a second. But so you get the promoter who says, invest in my company. I'll take, I'll raise $6 million. I'll spend 1.2 on marketing. The stock will go up, and hopefully after the 4-month hold is over, the stock will be higher. And then that's a sales pitch. I've got no interest in these kinds of sales pitch. And then you have the other extreme, which is, I spent 25 years at Barrick. I know my stuff, blah, blah, blah. I got this great prospect. Can you please finance that? And that's a tough sell. What I think you need as a junior explorer, you need the balance between having the great technical team with a great project, explaining to investors what you're going to do with their money that will advance the project in a very sound way. But then you need to explain to the upcoming shareholders or investors that you also know how to market yourself as a public company, and that you will do it on a daily basis. You will go to conferences. You will go to PDAC. You will talk to Antonio. You will talk to others, so that if I'm an investor and I'm say, well, I'm going to invest in your company at 20 cents, how do I get the stock to go up? Well, how are you going to get this stock to go up? Well, you got to market yourself as I described. And Steve and I, we're not afraid. I mean, you saw us in Frankfurt. So you get on a plane and then you go and you tell your story and you tell your story. When I got into this business, the fax machine was not invented. So that's how far back I go, right? So when we had news from a company, basically they would overnight the news release to us. We would photocopy it and overnight it to the brokers. So there was like a 2-day lag, right? And everything was either done by phone, or if you really wanted to get a broker, as an example, or an institutional investor to know about your story, you got in front of them and you told them your story, right? That's how we did things. Now you have emails and all that kind of stuff, but it doesn't change the fact that you still have to work towards getting that stickiness, right? Stickiness. So you tell somebody, I've got a very sound project, but I will be marketing myself, not in a few weeks, not with a big budget, but like the pros knows. Get on a plane, go meet people face to face or on Zoom, and give people a reason to buy your stock. And then once you've done that, well, you need to give them a reason on a regular basis to keep your stock, right? So there are not two components. If you talk to young people in the market, they think that there's only a buy and a sell, but there's a hold. So, and the hold is super important. So if somebody's a shareholder and I convince him not to sell, that's just as important as finding a new buyer. But it's easier because you already have him as a shareholder.
Well, that's actually maybe an assumption there that I might have alluded to, but that's not the only way of financing a company, right? I mean, you're mostly talking about equity raises here, but what we've seen more of, and specifically recently, given the state of the junior market, is asset level deals, right, where the company gets an earn-in JV partner on the asset, has gets them to pay for drilling in exchange for, say, 75% ownership in the project versus doing equity level dilution. And I mean, if you're a $3 million market cap company, maybe actually, I guess they both make sense in different scenarios. But let me maybe ask you, when is the one preferable to the other?
Well, that's another big one to unpack, Antonio. You got a few big questions for me this morning. So yes. So and it's very, very timely because what we're looking at now is strong commodity prices that has not translated into great support into the junior market. And deals are getting done, but it's not easy for anyone. So then, exactly to your point, so if I'm management, how about getting someone to come in and earn into a project? The big issue with that I have is, when do you do that? And then it could lead to this in sort of balance of economic capability, because if you option something to a big guy, and you think that you're going to keep, let's say, 25%, and you think that you'll be able, as a company, as a junior company, to finance a minority 25% interest, let's say, in a JV with Rio Tinto. Well, what are the odds that somebody will finance your minority investment interest in the JV, and then you might end up with a royalty? And you know what? I mean, that might be fine. Why not? But it's a big decision, and I'm involved in one other public company that's a completely different sector. But we're asking ourselves that, which is, it's hard to come by with money. So maybe we will JV or option out some of the projects. Then you have to be smart about how you structure that, and that you ensure that you might have a equity residual interest in the project.
Yeah, of course. But what does that look like specifically? Like 30%, 50%? How much should the junior keep?
Yeah, it'd be, I'd probably have to go into a lot of details for that. That'd be maybe a little bit too technical. But let's talk about, let me give you an example of a very successful company that owns a minority interest, and that would be Max Silver, that has a minority interest in the 1S CPO mine. But they've got a 44% interest, not 20%, as an example. So they were able from the beginning to attract capital, and they were really smart about it. They raised the money early on, so they were able along the way to make their contribution of 44%. So in their case, it's bigger dollars because it's 44, not 20, but it's easier because you do have an actual economic interest in the project. So if it works out. So I guess what I would say is, as an investor, it's you're kind of at the mercy of what the management's going to do. But you got to be quick on your feet and try to determine if it's a good deal or not a good deal. And for management, is to surround yourself with the right advisors. I mean, they're smart guys. There are lots of investment bankers that specialize in these types of deals. There are some very smart lawyers. So as a management team, I would say surround yourself with people who've done this many, many times, and they know these agreements inside out. And if you involve a banker as an advisor, you will right away not only get the advice on how to structure the deal, but how likely it is that you'll be able to raise the money to maintain some decent equity position in the project.
Right. But give me a number here. Like what's decent? Like is 20%, 20%, 25% decent in your opinion?
Well, my point, Antonio, is that the smaller the interest, the more likely you're not going to be able to finance that, right? And so the higher your residual interest, say 45 or 44, like Mag, the amount of money you're going to have to raise are going to be much larger. But you're more likely to be able to do that. And then if you have 20 or 25, it's a matter of how is that piece structured, and how is the piece structured when, let's say, the major goes from 50 to 75%, right? So there are a lot of different details and devils in the details. So that's why I'm saying as a management team, it's hard to do. You got to surround yourself um, with the right advisors and legal counsel. And as a shareholder, you're kind of on the receiving end of things, right? And you just got to look into the fine prints and try to decide for yourself. I was betting on this big project. Now we might end up with 25%. What are likelihood that 25% is going to be worth something down the road?
Well, I suppose if it's a discovery that's worth $1 billion or whatever, then it could be. I mean, any chunk could be worth something. Even at 10%, it would be worth something decent, right? Although, of course, those $1 billion deposits are a rarity and whatnot. But I mean, 10% of something is better than 100% of nothing, I suppose. And I'm exaggerating, of course. I mean, 10% is rather low in reality, and it would be hard to work, as you mentioned. But Alain, you said something that I'm going to go otherwise on a tangent. I'm rambling at this point already, but you said something there that I noted here. You said being on the receiving end, and I feel like there's a special place in my body, to steal a phrase or joke from a good friend of mine, but there's a special place in my body that hurts every time when I think about being on the receiving end of anything as a retail investor in this space. But what is what's your experience as an insider? Is there really a level playing field? Because to me it seems like it's tipped pretty steeply towards insiders in this space, and I don't know if that's kind of how it feels to you, like an insider. What do you think?
Okay, so that leads me to what I alluded to a few minutes ago, which is share structure. Right? So level playing field is what you call level playing field, is what I called earlier alignment of interest. Hmm. So when you look at me and you're interviewing me and you say, well, we'll talk about Prismo. Is Alain's interest aligned with yours, right? And that so we talked about compensation and so on and so forth at length. I let's talk about share structure, because if I'm a retail investor, the first thing I want to do after looking at management is looking at share structure, because share structure will tell you a whole bunch of different things. So I did a lot of work in the capital markets using what at the time was the Junior Capital Pool Program, which became the Capital Pool Program, CPCs, and then started on the Alberta Stock Exchange, and then that became CDNX, and then TSX Venture. And I had the pleasure of sitting on a lot of the exchanges committees over the years. National Committee, I chaired the Quebec Committee, and we were always, as members of the TSXV, as regulators. I wasn't a regulator, but I was part of the regulatory process. As part of my activities, it's a non-paying job, and was to make sure that we would have all the policies in place to restrict egregious share structures. So if you look at the TSXV, It has its own escrow requirements. If you're doing a deal, they have to resell share metrics. So depending on the price of the shares being issued at and the time people have had the shares, you might have resale restrictions. And I I um I took a sabbatical, let's say 2016, 17, lived in Tucson, Arizona, rode my bike a lot, as in bicycle. And when I came back, I saw that because of the cannabis bubble, the CSC had really progressed as an exchange, became more active, and so on and so forth. But the CSC doesn't have an escrow policy, so you're stuck with the national policy on escrows, national instruments on escrow requirements, and so what we started seeing in terms of share structures is so and in order and where do you find this? Why do you find it? You go on CDAR, you pull up the prospectus or the filing statement, and then you look at the share structure. And I see all the time, Antonio, management teams that have, let's say, 1 million shares out of 20 million shares. And then you look at the insiders, and there are no insiders other than the management. So you have 19 million cheap shares that are held by people. We don't know who they are. We know they're cheap, and none of them is in escrow because they're not they're not over 10%. So they're not caught by the national escrow. So you get a lot of falling, what do I call them? Entrepreneurial mining teams that put up a little bit of money, and then they go to work and they promote the stock, but you don't know who owned the shares and you don't know what they're selling. So that has, I believe, become an issue. And like anything in life, it's good for certain people, but it affects the market negatively. And I'm very passionate about what I said earlier. People need to look at who they're dealing with. If a management team, when they go public, has 1 million shares out of 19, and we don't know who owns the 19, well, who are you dealing with? The management team or a shadow management team, right? So you don't know. So back to, well, pull up a prospectus, and management has, I don't know, half the shares. And then they did a private placement at 5 cents, 10 cents. And there's a bunch of people that are not necessarily insiders that own the shares. Then you know that you're dealing with management, and you can be, trusting what they say.
Yeah, sure. But I get, well, I mean, the word there, aligned, that you just mentioned, also gets thrown around a lot, right? Well, what does that really mean, aligned? I mean, is a CEO with an average cost of capital per share of 2 cents aligned with me, who's supposed to be buying in the open market at 25 cents, while maybe on the other end they have their wife's sister's best friend in the stock too, and they're having them sell at 25? Like, how do you even deal with that word align there? It almost sounds like too complicated to track.
So I always start by public disclosure, right? So I'll pull the prospectus or the listing statement, and then you do control F, prior sales. So then you know every share that was issued at what price. And so I know that a lot of people say, well, management, what's your price? I look at this more broadly. So if management has paid, I don't know, a penny for their shares, and they're in escrow, and they own a big chunk of the company, and they don't have egregious salaries, then I prefer that to somebody who's got very few shares at 5 cents, and the vast majority of the other shares are held by people we don't know. Right? So you got to look at it all in, or if management says, well, yeah, I bought 1 million shares at 10 cents, but they're being paid 350, might as well gotten the shares for free, right? So you have to look at it all in very broadly. But I would say to your listeners, please go on CDAR. Please read the financial statements. Please read the disclosure documents. And if you're investing with a management, and go to steady.ca, look at the SETI reports and inform yourself about the share structure. Very, very important.
Well, absolutely. I say it in every episode, but you gotta read these things. You know, you go to setterplus.ca, but it was a new well, no longer, but the new thing. That's a government official website, I suppose. I suppose everyone can access. I can access it from Europe, but so you go on there and you read at least through the most recent MD&A, the financial statement. Those are like the two very, very basic ones, and then you do a little bit more on top of that. Again, as you mentioned, if you want to know the how much money management's making, the management information circular is going to be on there. And if you really don't want to spend time with your wife on the weekends, you read the available technical reports as well. It's boring stuff, I suppose, for some of the times, and it's intimidating most of the times. But after a couple of reads, a couple of times, it really gets better, or it has, at least for me. And if I can do it sporting a 70 IQ, everyone can and should do it. And that's yeah, I actually agree with that. That's actually a good point to talk about here, Alain, because while your IQ is certainly higher than mine, you're not a geo, but you're now pretty heavily involved in the exploration space, coming from outside the space too. So how do you deal with that part? Like, we haven't talked too much about that, but that's obviously a very important part of investing in mineral exploration is understanding alteration packages and structural controls, ore deposit, metallurgy, and whatnot. So how do you do that as a lawyer while also retaining at least some level of sanity?
Another great question. Love it. I'm fortunate. Let's put it this way, because I'm new to mining, and I most of what I know about mining I got from three great guys: Peter McGaw, Craig Gibson, and Steve Robertson. But let me, yeah. So but let me say this. So um, and you can, so obviously I'm sort of on the capital market side of things, and the one thing that I do not do is try to steer the technical team to do things that I know the market will like. Right. So what an exploration company needs to do is to conduct very sound exploration. And they need to communicate that message back to the investors, not the other way around. As I'll give you an example. The market, the retail market, has become conditioned to expect assay results, and everybody's an expert on reading assay results, right? You know that, right? So every investor, they make investment decisions based on a couple of holes, right? So, but that's okay. That's called gambling. But you can't do exploration based on that as a company. And it's harder because you have to do what is sound geologically at all times. And then you need to sell that to retail investors. And often you're selling them something that they're not familiar with because they're expecting something else. So we will drill at Hodbrecha this summer. And the first hole is going to be through all of the stratigraphy and all the different rock formations in order to learn where we're at in the system and where everything stands. We're going to explain that to shareholders. In spite of explaining that, I'm sure there are people who will not be satisfied with us doing that, because what they would prefer is that we drill what might be the sweetest part of the target, in hope that we're going to have good assay results and they're going to make money instantly or in the short term. But we're not, as a company, we're not interested in that. What we are interested in is to do things right geologically for the long-term benefit of that play. And the other thing that junior explorers need to keep in mind when they do exploration and they report exploration, their audience is not just retail investors. That's one of three audiences. The other two audiences are the more institutional part, right? The more sophisticated, larger investors. So you need to conduct your exploration in ways that's going to resonate with them. So because they're going to look and go, these guys know what they're doing. And then the third audience are the majors, so that they read your disclosure and they have a good understanding of what you're doing. They have a good understanding of why you're doing it. And they're gonna know right away that this company is being managed by sound technical people. So you got three audiences, and you know my advice to let's say non-geos like me who are either run public companies or closely associated, let the technical team do what's best for the play, because that's what's best for investors in the long term.
Well, okay, but you still though you have to have at least some level of understanding of what's in any given news release. And I've been able to mostly by luck really, to build a network of people, including geologists. Although the argument, I mean, the jury's still out on whether they're actually people, joking, of course. I've been able to build a network of people, geologists including, who I can go to for feedback on my stocks, even sometimes before they become my stocks to begin with, but also after that, when I'm following up on news releases and stuff like that. I read through it. Most of the times I'm not going to understand everything, but then at least I have someone to go and talk to. But then I also spend a significant amount of my time. Again, I'm lucky that way, but each day when I'm preparing for company interviews, it typically takes me between 6 to 8 hours. Well, I find out a company in less than that, but when I'm interviewing a new company, I want to know a lot more about it. And so it's typically 6 to 8 hours. I try to split it between 2 days. This is not a day in the life video. So, but anyways, I spend a decent amount. I'd say at least half of that time I spend on understanding the rocks, reading into the geology, watching videos, again, talking to other people about it. But I'm kind of getting a different picture here from you, maybe, where it sounds like you don't spend too much time on actually understanding what's in the ground. And I feel like that's the approach of a lot of people. But so how do you actually do it? What do you care about when it comes down to the geology and understanding the news releases?
So here's the way I look at an exploration program by a public company. Once so the first part is, let's say we're going to talk. Let's focus on drilling. You get your drilling permit, and you get finance, right? So from including that part to the assay results and beyond, think about it like a Netflix series, right? So you have an episode every week, every month, every 6 weeks, right? And you know what those are going to be. You just don't know how the plot's going to end, right? Because we don't know what's in the ground. So you need to communicate with investors what that Netflix series looks like. What are the episodes? When are the episodes going to be? And then when episode arrives, you tell them what's in that episode. So we're going to get financed. When? How? We're going to get permitted. When? We're going to mobilize. We're going to hire and mobilize a driller. We're going to start drilling. We're going to drill 1,000 meters. How long is it going to take? 4 or 5 weeks. You're going to the core. You're going to send it to the lab. How long before you get the assays back from the lab? How long is it going to take for the technical team to compile that? And so on and so forth. So you have a very good view. As a company at Prismo, we have an excellent visibility on all our activities for the next 12 months. We just don't know how the plot ends, right? Because that needs to, we need the assays to tell us that. So every time something happens that kind of fills in the gap for the investors, we explain along the way, the significance of everything we're doing. And it might be that the market is conditioned to, let's say on hole number 2 at Harbrecha, let's say they're expecting, I'm making this up, right? 200 meters at 3% copper. And let's say that's their conditioning and that's their expectation. Well, that's quite irrelevant to us, right? Because as I go back to what I said, we're going to do everything that's right, exploration wise, for the future of the play. And the results are going to be what the results are going to be. But what we will do, Antonio, is we'll describe not only the assay results, but what it means in the context of that overall story, exploration story of Harbrecha. I mean, if you look at the resolution mine that's being built 40 miles or 40K up from Harbrecha, I mean, it took a while to find that thing, but it's a world-class giant, 1.6 billion ton at 1.5% copper. And they had initial indication that it was there. They had the indication it was big, but it took some time to find out how big it was.
Right, for sure. I mean, it takes time, and you want a company that will help you out too by having a decent website with a decent amount of technical information on it and a decent presentation. Potentially a willing CEO who's willing to sit down and talk to you about it, and realistic too, right? I mean, if I'm investing, $2,000 in a story or something like that, to me, a lot of money. To the CEO, not going to move the needle at all, right? So should they spend 2 hours talking to me about the rocks where I don't understand? Maybe not. But anyways, again, it's as a retail investor, it takes time, and as a company too, it takes time.
It takes time, and you need to educate your shareholders. So every CEO has of a small public company involved in exploration. Don't condition your shareholders for your assay results in the short term, because that's a sure way of, either making them happy or unhappy. But that does nothing for you as a company for the long term, right? You need to condition people and not feed the retail investors what you think they want to hear.
Well, I agree, I guess, but in the end, you have to fend for yourself as a shareholder. I mean, you shouldn't expect anything from anybody. I guess. I mean, it's business after all, right? If you don't know how to take care of yourself, you will become the victim. That's what Rick Rolls taught me. And again, unfortunately, speaking from experience here too, but although briefly or happily brief experience in being the victim, and hopefully no longer, but who knows? Enough introspection here, okay, Alain. But where are we now? Is there anything else to talk about regarding shenanigans and red flags and green flags? I'm kind of a lot of questions here. I don't want to start rambling, although I have a little bit here. But what am I forgetting to ask you here?
Well, so in conclusion, Antonio, for the retail investors, it's just remember, right? You have to determine for yourself who you're investing with and what type of investment you're looking at. Because not every junior exploration plays the same. And you can have, as I said, you might be investing in a stock promote that looks like an exploration company. And I don't judge anything or anybody, but you have to determine that for yourself. And then at the other extreme, you might have a great technical team that advance the project, but they're not marketing themselves to investors. And then they might run out of cash because, it's difficult to raise money just on what's on paper. So you need to find the right balance. And you need to, as a retail investor, you do need to dig into those financials, those prospectuses and steady reports. And I understand that most people don't have the time. And as you said, it might be intimidating at first. You go to, cedarplus.com, and where do you start? But I want to say thank you, Antonio. As you can tell, I'm very passionate about those things. I think there's great money to be made in the junior exploration game. You just need, as an investor, to decide what's your business plan, right? Are you chasing the next stock that's going to run because you think they're going to have good assay results in the short term? Maybe that's your business plan. Are you going to, then you got the guys that are more long term, like you had Michael Gentili recently. He's a long term guy. He's looking for different things. His business plan is different. So everybody has their own business plan. And in conclusion, Antonio, if anybody that's listening gets even one thing that helps them refine their investment business plan into the junior exploration space, then you and I will have done well.
All right. Well, that's yeah, it's been a good. It's a good note to end it on. We've barely scratched the surface here, so hopefully I'll get you back on soon. But we've been talking for over an hour now, so I assume you want to stop looking at my face. I would too, but I'll let you drop off now as I'll be moving on to the CEO barbecue. CEO barbecue. That's a nice thing. Is that a thing? Barbecue. Anyways, CEO barbecue portion of today's episode. But of course, not before I've let listeners here know that I don't hate them for some weird reason, unlike most out there. And why I'm saying this is because I want you to know that I'm here to make money. This channel exists to make money for me, and what that means specifically is that I would like you to be aware of the fact that although none of the companies you see in here today have paid specifically for the production of these interviews, first of all, I do have a financial relationship with Prismo Metals, but so the company that Alain is CEO of here, they're not paying for the production of this interview, or we just did it as I told you, and as you probably heard, there's a lot to be taken out of the things that he was saying. But anyway, there is a relationship there that you should be aware of. There's no relationship with the other two companies, though, but still, those two companies are still likely seeing their participation in this program as a chance to do marketing. So start by understanding that, and also be aware of the fact that this and other channels who interview CEOs or talk about companies or public markets and stuff like that, those channels typically earn money by charging for the creation and publication of these interviews. Most will not be as vocal about it, unfortunately, and they, may not even tell you about it. But so, and sometimes they would even make buy or sell recommendations. And there's no buy or sell recommendations on this channel because there is a clear conflict of interest, in my opinion. Many are still going to do it. They're going to take money from the company and tell you, hey, you should buy that stock because it's a good time. You want to, well, you want to be aware of that fact. It's not always necessarily bad, but you want to be aware of that fact. And so whenever you're watching any type of company specific content, just approach it with a dose of skepticism and understand that it's marketing. So use your own brain while consuming any type of company related content. But also, although I try to do a decent amount of research and I don't give the companies the questions up front, there are no questions off the table and the companies get no say in what ends up in the video. I'm not going to sign any release forms or anything like that. These things should still be looked at as advertisements and not as recommendations. Okay. None of us know what we're doing. Otherwise, we wouldn't be making videos for the companies. We'd be investing in them for a living. And well, I'm not there yet. And my opinion, most who talk about companies online are not there yet either. No guarantees here, besides that there will be forward-looking statements in these conversations. And those are conversations that are general and impersonal in nature, containing hopes for the future. And those are events that may or may not take place depending on billions of factors. That might be an exaggeration, but many factors that are both within and outside of the company's control. So be aware of that fact, and please talk to a professional investment advisor before doing your own research. As discussed with Alain, you want to go to setterplus.ca where you'll find the company's official findings and do more research. There are disclaimers on your screen right now. If you don't enjoy losing money, read them and be careful out there. With all that said, though, I'm losing my breath here, and I've got someone waiting to talk to me. So I'm going to be kicking off the CEO barbecue portion of today's episode by traveling back to Europe, a place where I've actually never gone looking for mineral discoveries. Well, I've been to Europe, but not this specifically, because this is the Emerald Isle of Ireland, where I'm actually not going to be looking for emeralds, but something much more exciting, with that being zinc. Said nobody ever, but I'll be hearing about it from Bart Jaworski, who is based in Ireland, and he's also the CEO of Group 11 Resources. The company is listed as Zinc, so that'd be ZNG on the Ventures Exchange in Canada, where an average of about 100,000 shares trade each day, with a 52-week high of 28 cents and a 52-week low of 7 cents. With a market cap of about $35 million and about 200 million shares outstanding, today this is a 17.5-cent stock. There are 33.5 million warrants and 4.5 million options, leaving the number of fully diluted shares at, and I'm rounding up, 240 million. Insiders here own about 3.3% of the company. Glencore is an interesting connection that we'll discuss later on as well. They own 18% of the company, and 15% is owned by Michael Gentile, whom I interviewed last week and who also put me in touch with Bart here. So, Michael, if you're listening, shout out to you. Thank you for doing this. And then we also have Tech Resources in here at just about 1.7% ownership, which is curious. Again, hoping to touch upon that later on. The last financial statement, which is dated March 31st, shows me $2.8 million in current assets, 2.7 million of which, to be specific, was in actual cash and cash equivalents. And there's also negligible amounts of prepaid expenses and account receivables. No long-term debt, of course, but I do see about $600,000 in accrued liabilities, two-thirds of which in account payables, part of which pertaining to related party transactions. That same financial statement from March also tells me that on average over the last reported 3 months, Group 11 recorded about $80,000 a month in administrative expenses, mostly in the form of salaries and benefits, where about $110,000 went into exploration expenditures. Again, that's per month and on average over that last 3-month period. And that was mostly in the form of actual drilling, which is where we're seeing the results from now. In terms of ratios, that would specifically mean that about 60% of the total cash burn went into the ground, and so about 40% it went into administrative expenses. As always, though, I would like to remind everyone listening and watching that this financial statement is nothing more but a snapshot in time. In this case, it's specifically at the end of March of this year, and the finances will have changed by the time you're watching this. So please head over to the company's website as well as setterplus.ca to look at all the numbers yourself. Make sure you're getting the full updated picture by the time you're watching or listening to this. Enough accounting for today. Group 11's flagship project is called the PG project, which is located in southwestern Ireland. It's 100% owned by the company, and it hosts the Bailey Wire discovery. This discovery is strategically located. It's about 20 kilometers away from Glencore's Palace Green zinc deposit, it's a big deposit. It hosts 45 million tons of an inferred resource at about 8.5% zinc and lead. And announced in September of 2022, Bailey Wire is a high-grade massive sulfide discovery that has shown with significant zinc mineralization on over a 2.6-kilometer trend, but it still holds the potential to be extended to potentially 6 kilometers here. The discovery hole came back decently mineralized already, intersecting 66 meters of 2.8% zinc and lead and 29 grams of silver. But since that discovery hole, the entire discovery has kept growing, most recently in grade 2, but so in grade and in size, and most recently in grade with almost 30 meters of 10.6% zinc and lead and 78 grams of silver per ton. And that was announced last week at the Bailey Wire discovery. So kind of a big hole there that we're going to talk about, of course. Further on, this whole area is marked by soil geochemical anomalies. So the company believes that well, the geochemical anomalies have I'm going to try again. The geochemical anomalies have resulted in the company delineating multiple high priority drill targets and essentially leaving potential growth for this whole discovery. And now they're drilling as we speak. They're actively drilling Bailey Wire with 2 rigs. They're testing different anomalies and so trying to grow that high grade strike length, which the high-grade component of it all now sits at about 900 meters in total, with a total strike length of, again, 2.6 kilometers, which in and of itself sits within, again, a 6-kilometer-long gravity trend. So that's where the growth could come from. Pretty big, basically, and also something I hope we'll be discussing on later on. Although not the focus for Group 11 nor this conversation, the company does have 3 more projects, the Stone Park project being one of them. That's where Group 11 has a JV on, so they hold a 76.5% to be specific, 76.56% to be even more specific interest, with Arco Resources holding the rest. And the Stone Park project is also in the southwestern Ireland. It's 184 square kilometers, and it's contiguous to that PG West project that I was just telling you about. But it's also contiguous with Glencore's Palace Green project that I mentioned earlier, which is again that's one of the largest undeveloped zinc deposits in the world, over 45.5 million tons. And so it's contiguous to that, but it's also contiguous to what South 32 has to the west. So it's apparently, or summarized, it's in the right neighborhood there. There is an inferred resource on this project dating from 2018 and showing 5.8 million tons at 11% zinc and lead. That's, of course, not why the company is not the only reason why the company is still holding on to this project, but mainly because recent drilling at Stone Park, including the Carrickettle West prospect, has shown some decently high-grade intersections. So, again, warranting further exploration. That's not the only joint venture project the company has its fingers in, though, as they also hold a 60% interest in the Ballinolac project, with Nonfamet holding the other 40%. They've got 5 prospecting licenses here, covering about 170 square kilometers of land, and that's in north central Ireland, so in the neighborhood of Bolidden's Tara mine, which is producing lead and zinc as we speak. So it's an actually producing mine now. 5.5 million tons of about 9% of lead and zinc with some silver is what the 2019 MRE on this project showed. But just like with the previous one, Group 11 believes there's more upside and more drilling to be done. But there's none happening at the moment as far as I could see. And then last but not least, outside of the JVs, there's another 100% owned project. It's called Silver Mines. It's a smaller project. It's about 43 square kilometers of land, and that's in South Central Ireland, which is well, this is adjacent to the historic silver mines. It's a mine where 10.8 million tons of zinc and lead was produced historically from the kind of late 60s to early 80s. So again, this sounds like a good time for me to maybe shut up, and because there's plenty to talk about as is already, and I hope we'll get to most of it over the next hour or so. But Bart, let's start off maybe with what I mentioned there at the beginning with Glencore's involvement into the company. They own over 18% of the shares at this point, and they have a director on your board as well. So is this?
Mhm.
I mean, is Group 11 turning kind of into an exploration arm for Glencore, or what's the meaning of this all?
Well, yeah, you're right. They came in 2019. They started investing. They put about $2.5 million into the company to date. We are, as you say, very good summary, by the way. I'm very impressed. The details were spot on. But yeah, we are next door neighbors. They do have this 45 million ton behemoth deposit at 8.4% Palisgreen right next to us. So it's a unique situation where we are actually neighbors, and there's synergies between the two assets that we have, between theirs and ours. And then we have I would say the dominant land position in that Limerick Basin, as it's called. There's a lot of target horizon there. The target horizon in Ireland for zinc is called the Wall-Sortian limestone. So there's a lot of Wall-Sortian limestone in that area. It's also very unique geologically because Palisgreen sits on the northern edge of this really unique and large volcanic feature called the Limerick Volcanic Complex. It's about 20 kilometers across, east-west, and about 10 kilometers north-south. And so the Glencore deposit sits on the northern edge of that and kind of goes underneath the volcanics. And so we hold the southern part of that complex, which has never really been explored. But our work today over the last couple of years has shown that there's a major fault structure running through there. There's a lot of alteration, which is very much akin to what Palisgreen is seeing. So there's a lot of interesting tidbits geologically suggesting that our ground is very, very prospective and could even host like a doppelganger or a mirror image of Palisgreen on our side. That's within, say, 10 kilometers of Palisgreen. If you go further down 10 kilometers along trend, even further, then you get into our new discovery, which is Ballywire. And that's at the intersection of these two mineralizing trends, the Palisgreen corridor and the Rathdowney trend, which was the Sheen Galmoy. So that's a really really interesting prospect just regionally without knowing anything else. But of course, over the last, call it 18 to 20 months, we've made this discovery now, Ballywire. So, that's why, to answer your question initially, Glencore is really interested, I think, because we have a dominant land position in very prospective rocks. There's a lot of geological clues that our ground is very prospective. And I think, eventually, if they have a toehold into us as they do and a director on our board, then, they're obviously keeping tabs on us. They're busy on Palisgreen. We're busy on our stuff, and who knows what'll happen. But, it's interesting that they are in the camp. Hopefully, we can make 2 discoveries, not just Ballywire, but maybe this Carrickettle West target that we have, which is the doppelganger potential to Palisgreen, and it could do good things for the camp.
Well, who knows what happens is an interesting question. The answer, of course, is no one. But I mean, I could have a guess. I suppose there's speculation that's that these two things move together under the Glencore umbrella. Because I mean, the involvement of Glencore at 18% ownership and a seat on your board is not it's not necessarily welcoming to other potential acquirers, right? That's kind of along the lines of what I'm thinking. Leaving them is kind of the only option. And again, that's a personal opinion, but the only option for potential buyout later down the road. And so what I'm really asking here, or trying to ask, I guess, is how do you manage the potential conflict of interest that might exist here, where it's essentially in Glencore's best interest to or in Glencore's shareholders' best interest for them to buy you at the lowest valuation, but it's in your shareholders' best interest to be sold at the highest possible valuation. So how does that get managed there?
Well, I think the thing for us to do is to find something that is a standalone. So if we only discover something that's a satellite, say, and it really needs PAL screen in order to flip the switch and make it economic, then you could argue then that's the case. Then we're beholden to Glencore. But if we find something truly world class, especially if it's two of them, two discoveries, then there's one or two standalone projects, and we can go ahead and go into production without Glencore's PAL screen deposit. And I think that would change the dynamic dramatically in terms of, how the camp is best developed, et cetera, et cetera. Then you can infer your own M&A implications into that. But I think that's the key thing is we need to really make a discovery here that's of size and something that we can put into production without having to rely on PAL screen. So that's one thing. South 32 is also in the neighborhood. So whether that matters or not, but they're butting up against our property. They're adjacent to our Palette Green property as well, or PG West property as well, and Stone Park. So that's another potential. Obviously, that was a vend-in from Adventus. Adventus is now going through M&A with Silvercorp. So perhaps we inherit a different neighbor as well with that in Silvercorp. I'm not sure if they're going to have a different strategy there. We haven't heard much from South 32 in terms of exploration results there, but they've been working that ground for a number of years now. Very curious to see it. It is very prospective ground as well. So, we have a little bit of tension in that regard, and the other countries in Ireland as well. Teck, Boliden, as you mentioned, Glencore, South 32. So, there's always, I guess, companies kicking tires within the country as well. So you never know if somebody else arrives on the scene as well.
Well, what's with that tech involvement, by the way? Because the 1.7%, I mean, it seems kind of,
Legacy. Yeah, it's a passive legacy stake. Basically, when we started the company in 2015, we had acquired a lot of ground in the Limerick area. And at that time, actually, Mag Silver was involved as an early funder of ours. And so when Tech saw that, basically they came to us and offered to potentially do a deal here. We were very keen on that, and we ended up buying Stone Park and Ballinallac from them. They're two pre-resource assets. We knew that they were very close to something that we could put a 43-101 on very quickly. There was one historic estimate at Ballinallac and no resource officially on Stone Park. So we bought those, and that really substantiated us going public on the venture, on the TSX venture in late 2017. As partial payment for those assets, Tech was cash, but also in some shares. So they own roughly 3 million shares of us from that transaction, and they're still shareholders. So very happy to have them there as on the register, and obviously communications there as well, because they have been on the ground here for many a year.
They're not, I don't assume they're electing to participate in your last financing was late last year.
No.
I assume they were not in it.
No, they've since that transaction back in 2017, there hasn't been anything like that.
What about Glencore? Were they part of the last financing?
Not in the last financing or the prior one, but I think altogether there's been 5 subsequent since 2019 that they have participated in, all the way up to, so in cumulatively speaking, $2.5 million
right,
that they've invested in Group 11 since 2019 in 5 transactions.
Would the idea be, I mean, what are they telling you? Do they want to keep participating in these financings, or is that not something that you guys openly talk about?
I think we wouldn't know really that level of detail as to what their strategy is. We do talk to them often on the technical side regularly, So we regularly have conversations and meetings with Glencore on technical side. So we usually tell them everything that's going on, obviously, and they can give us pointers. And it's actually been very helpful in terms of what their experience has been with Palace Green, what type of alteration to follow, depths of drilling to follow, et cetera, step outs, geophysics, downhole geophysics, all those types of technical issues, which are pretty handy for someone that's already drilled 500,000 meters next door to you. So so that's certainly the case. But in terms of what their plans are in the future, you know, that's kind of higher level stuff that we're not really privy to. But I can say, obviously, that, you know, they have been active. They continue to hold the ground for many, many years. They acquired it through the Xstrata transaction back in 2012. There was a bit of a hiatus after that in 2012, and then they really started to work on Palace Green in 2015. It's all publicly stated in their annual results. And there's usually a blurb in their annual results as part of the reserve and resource statement. So there's a blurb on Palace Green in terms of how much drilling was made. So long story short is they're active on Palace Green. Then they invest in us. Then they put a director on our board. So clearly invested in, I think, that region. And part of the thinking there is clean concentrates down the line. You know, it is a world-class jurisdiction for zinc. It is a stable, democratic, first world jurisdiction, poised to have the greenest zinc in the world one day, with the advent of the wind power coming on strong over the next decade, call it, plus all the other benefits. And you had to see the prerequisites to cash flow in Ireland are super. You've had 6 deposits put into production there over the last 60 years, and that speaks to the tonnage, the grade, the proximity to smelters in Europe, the clean and simple metallurgy that we have here, and of course the infrastructure, which is one of the most important things when you're talking about a base metal project. You know, the roads, the rail, year-round tidewater, and power, especially if the power is going to be all wind gen. Right now it's about 30% wind, but so maybe that's a bit of a tangent, but to answer your question, yeah. So we'll have to see what their modus operandi is on the ground there. But you know, we've been Ken's been on the board for 4 years now, and we've been working away here. And I think obviously what Glencore wants us to do, obviously, is to discover and to find something big. You know, because obviously that would really, I would imagine, do good things for the overall camp in terms of net present value, right?
It was a bit of a tangent, but I appreciate it because it's a good tangent because it's reminding me of kind of the first thing that I thought after looking at your news releases from 2024, and that was that there were a lot of metals at play here. I mean, it initially started off as a zinc lead type of play. Oftentimes you've got silver into that mix as well. Copper is becoming part of the story,
Yeah,
though slowly here a little bit. And then germanium was even
yeah.
mentioned once. So the next thing that I thought was, and this is a question for you, I suppose, is how I mean, how complicated does all that make your metallurgy and your previous assumptions on it being a clean concentrate and a good metallurgy? Does any of that make it more complicated?
I don't think so necessarily, not relative to a VMS deposit, say, or a SEDEX deposit. So VMS deposits usually have a whole bunch of other deleterious metals in them. But Irish deposits tend to be fairly clean. So there's always a little bit of silver in the Irish deposits, maybe 20 to 30 grams on average. We seem to be getting higher than that. We're getting up to, you know, regularly 100 grams per ton, but we're also getting these real gangbuster numbers like 1,440 grams per ton of
Hmm.
silver. So we're getting some really phenomenal silvers. But that seems to be associated with the galena. That's naturally where silver ends up, is in with the galena, which is the lead sulfide. The germanium would then probably be microscopically included within the sphalerite, although we haven't done the met test yet on that. So germanium, I guess we've done some work on it. We know that all the massive sulfides that we've tested so far do have elevated germanium as a barometer, because I'm sure your listeners may not know too much about. I certainly didn't know much about germanium 2 years ago. But germanium is worth about $44 an ounce right now. It's actually up 10% since the beginning of the year. It's a high-tech metal. It's used for AI and military high-end chips. So call it 50% higher or more valuable than silver. And it occurs usually with zinc deposits and coal deposits. So 80% of the world's germanium comes from China. And there's a tit for tat between the West and the East right now over, you know, these AI high-end AI chips. The West doesn't want China to have them. and China's saying, fine, we won't give you the germanium to build them because we produce most of the world's germanium.
Right.
So it is very strategic for us to have germanium on Irish soil, i.e. European Union soil. And metallurgically speaking, I don't think it's going to have too much of I mean, if we choose to just ignore the germanium, then I guess the smelter will just have a freebie. But if that's not the case, then we can, try to extract it. But there's a lot of different options there. So far, we haven't seen anything. I think the biggest problem metallurgically would be if there's oxides, because then you're talking about a whole different suite of metallurgical processes to try to extract the metal, and we just don't have that, thankfully. Most zinc deposits in Ireland are sulfide; they haven't been oxidized. There's a few oxide deposits around silver mines, but again, thankfully at Ballywire, nothing like that, and certainly not at Stone Park. Not Palace Green, not Ballinalack. All those are sulfide deposits. So it should be fairly standard flotation. You're basically producing a sand type of material with zinc in it, and another sand type material with the lead in it. And the lead will probably have the silver, and the zinc one would probably have some germanium in it as well.
Oh, okay, but so in an ideal world, it is very forward looking, I understand, but that's it. I mean, 2 circuits, or how many circuits would you want to have here if the project gets into production? And how do you really get credit instead of get penalized for things like germanium? Because if it's a freebie for the smelter, that's fine. But if it's tough for them to process it or whatever,
Yeah.
yeah.
As far as I know from, there's some examples out there that we can point to. So Capushi's one, Red Dog is another. Tex Red Dog deposit over in Alaska, that not deposit, but full on mine. They sent part of their concentrates over to Trail, and Trail certainly does have a germanium circuit. And I don't know what the pay ratio is or anything like that. I don't think that's ever been published, but I assume that there's revenue benefits on the germanium back to Teck for that. Same with Capucci. So that's Robert Friedland's Ivanhoe project, Ivanhoe, that owns Capucci in the DRC, and that's a very rich zinc deposit. And the U.S. Geological Survey actually if you look at germanium, U.S. Geological Survey, they point to the Capucci deposit as one of the highest grading zinc deposits with germanium in it. And they're grading about 64 grams per ton of germanium. So I assume Robert would have figured that out how to get paid for it, because it is obviously quite a valuable metal. So I assume that's in the works. So other than that, we haven't done that much work on it. We know it's there. We're getting so if Robert's is 64, we're getting sort of between 30 and 70 grams per ton. So we're kind of in that ballpark. Germanium doesn't concentrate very well geologically in the Earth's crust. So it's one of these metals that just kind of lingers in the background at relatively low levels, and maybe in some deposits gets a little bit elevated to sort of the 30 to 60 gram range, but it doesn't go higher than that typically, not that I've seen. Maybe in some coal deposits in China, the grades are a bit higher. But look, it's a sweetener. I haven't heard anything about germanium being a penalty metal, anything like that. So I think we should be safe. I think I look at it as a potential carrot, not for ourselves, but maybe for somebody who eventually acquires us.
If there's one thing I know about Mr. Friedland, and that is that he knows how to get paid. So not surprised by that. But that's let's maybe talk about how the germanium and how everything else got there in the first place. So maybe do a bit of a deeper dive in the geology behind the whole Ballywire discovery, starting kind of high level, but thinking about the structural control specifically, because given the intersection of the Rathdowney Trent and the Palace Green corridor, those are 2 rather large but also kind of independent structures in the region. Given that you're on that intersection of the 2, is that throwing you off in any way, making it maybe harder for you to map and interpret the structural controls of what you have?
Not at all. In fact, I think that's what drew us to the place, is because anytime you have an intersection of 2 mineralizing trends, that is a big, blinking red light of this is a hot spot. You should go there. And in our case, the structure is maybe there was a lot of movement along the structure initially, but there's been some reverse movement later, and it's brought everything back up to what seems to be back to normal. So maybe there was a little bit of movement initially, maybe the mineral came in and then it started to get moved up again, or as we call it, reversed. So now you're basically seeing both sides of the fault pretty much in line with each other, give or take a few meters, maybe 5-10 meters. But there's certainly a structure. There's certainly a lot of sort of more east-west trending structural control on the mineralization. We're certainly seeing the massive sulfide now over 900 meters. Everywhere we drill, it's almost straight as an arrow. so over 900 meters, which is fantastic. And then if you look at it along the long section, it's all straight as a table, So that's the really nice thing, because typically VMSs and maybe SEDXs, I was going to say SEDXs with the sliming issues metallurgically, but in terms of VMSs, they can be folded and faulted, and it's really tough to follow them. Same with certain CRD deposits. They tend carbonate replacement deposits. You can get in and out of them very easily. The nice thing here is that it's one tectonic trend, if you will. It seems to be straight as an arrow for 900 meters. We're certainly getting hits over 2.6 kilometers. And then we're along the target horizon. We have these, you mentioned the gravity anomalies, the A, B, C, and D anomalies. Right now, all our drilling has effectively been on the C anomaly. We're just starting to drill the B anomaly. We haven't even touched the A and the D anomalies. And once we do, that'll really spread our wings over the 6 kilometers. So again, to answer your question, it is actually geologically quite well behaved, structurally well behaved. There's enough structure there to have created a lot of massive sulfide clearly, which is fantastic. If there wasn't any structure there, there wouldn't be any mineralization. These types of models require two fluids to mix. So the fault comes in, usually a metal-rich fluid comes up and a saline-rich fluid comes down, and they mix and they drop out the metal there. So you need that plumbing system in there to allow those two fluids to meet. So clearly that's there. We haven't seen many, those sort of northwest, to simplify things, north-south trending faults too much, but they're probably in there a little bit. But maybe they're a lot wider spaced out. Maybe they're spaced out over a kilometer or so, as opposed to tens of meters. Certainly the mineralization that we're seeing, there's a lot of smaller faults over within, say, 10, 20, 50 meters, but basically over kilometers in an east-west fashion. If that makes sense without showing you a map, it's hard to describe. But to answer the question, no, it hasn't thrown us off at all. In fact, it's a very good thing. So it makes the whole place super prospective.
I think these types of deposits also don't take too much to get mineralized. I think they get mineralized at lower temperatures. Is it 70 to 200-ish type of thing?
Yeah, you've done your research. Yeah,
I tried a little bit. Yeah.
Yeah.
I got at least look like I know what I'm talking about here. Yeah.
Oh, fantastic. Yeah, they're low temperature, albeit MVTs are typically lower temperature, albeit the Irish style are a little bit higher temperature than the typical bounds of an MVT. So they're kind of their own little animal, so they're kind of a higher end member of the MVT family. And in our case, actually, this is interesting geologically, because we have this volcanic element, this huge circular feature in the Palace Green area where Palace Green sits. There could be, and the volcanics were coming in at the same time as the zinc about 350 million years ago. So maybe it's heated up the whole area, and that's maybe why we're getting so much silver. So there's definitely some kind of maybe a volcanic contribution to the thermal regime, and maybe to the fluids, and maybe a lot of silver in there is because of that. And perhaps back to the copper, it is a growing theory within the Irish geological community that copper would rest at the bottom of these zinc deposits. So we do have, like, Gort Drum is a copper deposit in Ireland in the Limerick area that was mined in the 60s as an open pit. And that's theorized that there was once a zinc deposit sitting on top of it, just been eroded off over the millions of years. But the copper core is there, and that was running at about 1% copper, and some high silver in there as well. So it's theorized that underneath, maybe somewhere deep underneath Palace Green, or maybe on our side, maybe at Carrickettle West, that's certainly going to be a target, because the fault displacements have brought up the sandstones, and the sandstones is what holds the copper. And so it'd be very interesting if we have a zinc deposit, we might have beside it on the other side of the fault, the sandstones, which may be copper rich. So definitely something that we're thinking about down the line.
If that was the case, like if the whole area got heated up, essentially, would that be a challenge for continuity is what I'm thinking, because there also appears to be a decent amount of variability in the lithologies across that land package, again, given that it's large. So would that impact the consistency and concentration of the mineralization in any meaningful way?
We haven't really seen that yet. So it's pretty consistent, certainly over the 6 kilometers. And again, nothing to say it doesn't continue beyond the 6 kilometers, but just kind of, that's where the gravity anomaly stops. So we figure, okay, that's probably the natural place to stop that area of prospectivity. But that's pretty consistent. If you zoom out over the old, satellite view and looking at sort of the square 100 kilometers, yeah, there's a lot of variability because there's fairly subtle, gentle folding going on, like, very subtle regional folds, if you will. And there is a little bit of strike slip type of faults running through there as well. So it's complicated in that, but only when you really zoom out and look at the grand picture satellite view. But if you're on the prospect scale, it's fairly regular. So there's not much jumbling of the lithology. So no, I don't think that's a concern so far anyway.
That's what's created the sort of low rolly hills, if you will, I suppose, of the landscape.
Yeah, certainly. Yeah.
Okay.
Yeah.
So when you combine your understanding of the structural controls and the way you manage the various lithologies here in the land package, you're not necessarily having troubles distinguishing between different types of mineralogy or the alteration or something else that's kind of making it harder for you to understand what you're doing here.
No, they're relatively simple. I mean, if you see the ideal thing is to see a black breccia. So this is limestone that's been busted up, broken into a breccia. That's what breccia is. And infilled with this black, very fine-grained dolomite. And so that's, if you start to see that, that usually creates a much more of a kind of a envelope around the mineralization. So once you start hitting the black matrix breccia, you can start hone in on the different systems. Ballywire, we're starting to see different types of breccia, not necessarily the black matrix breccia, but certainly parts of it are looking in that direction. And certainly the minerals there, that's your best clue that there's a mineralizing system there. I was also going to say, by the way, as a little bit of a backshoot, is that back to your structural question, a major thing to know about the area that we're working in is that an ocean closed here back 400 million years ago or so. It's the Iapetus suture. So basically, this is a massive area, an ocean, the Iapetus Ocean, the size of the Atlantic, closed, and the north side and the south side basically came together, and we're basically in that suture zone here in the Limerick area. So that's why it's such an interesting area as well, because there is a lot of there will be a lot of structure in through here, and fossils on the north side of the suture are different than the south side. And that carries on through not just in Ireland, but to Canada, North America, etc. So in terms of mega structures, you've got the Iapetus suture, and it runs all across Ireland, all the way through to Dublin, to Navan. Navan is the largest zinc deposit, one of the largest in the world. It's definitely the biggest in Ireland. It's over 140 million ton deposit at north of 10% zinc and lead. Absolute monster. And that's basically within, the throes of the Iapetus suture. Very much a control on mineralization. Are certainly associated with the Irish ore field. So that's something, I guess, if we're talking geology, that's the number one thing to mention, because that's probably dominates everything. And then the secondary structures off that are where we're finding these mineral deposits. And Ballywire is probably one of those, parallel to the Iapetus suture.
How does that fit with the breccias there, though? Because as far as I understand, again, I'm the first thing from a geologist that you'd speak to today, but as far as I understand, the breccias are created in a more kind of violent way, higher temperature too. So how does it fit that you do have breccias that might be mineralized?
Well, you have this transtensional tectonic activity. So there's a lot of pressure coming in. There's some strike slip action that creates a lot of volume, that creates spaces in between. Fluids come up and they're relatively warm still, and they dissolve the limestone, and from that you get different types of breccias. So that's an oversimplification, but there is a structural regime here. There's a lot of tectonic activity at the time that created a lot of faults and extensional zones. Fluids were coming up and dissolving the limestone. The blocks that are maybe a little bit less dissolvable ended up creating the breccia, the clasts within the breccia, and then the fluids that were coming in and crystallizing them were forming the matrix. And now the other question is, was that whole process even more violent and active? Because the most breccia that you see actually in all of Ireland, outside maybe Navan, would be in the Palace Green deposit. Palace Green deposit is chock-a-block full of breccia. Absolutely chock-a-block, masses like anywhere. It's one of the most endowed deposits in Ireland, and certainly the black matrix breccia that you see at Palace Green is unreal. And so maybe that's an element because of the proximity to the volcanics. So again, Ireland is very special, but within Ireland, that Palace Green area is extra interesting just because of that volcanic component. And it might tweak things in terms of the amount of fluid flow, the amount of thermal dynamics you have there, and certainly the amount of breccias that you might be expected to produce.
Knowing and understanding the similarities between the two land packages, so yours and Glencore's, you told me that it took 500,000 meters of drilling for them to define that resource. It's over 45.5 million tons. How much drilling would you, and can you really deduct anything from that to kind of give me a guidance as to how much drilling it's going to take for you to go to first resource, but then eventually something major?
Well, I think a lot less. The geometries of the two are quite different. So it looks like with Palace Green, the one interesting thing about Palace Green, and that's different about it relative to the other deposits, that there's no obvious fault feeder that has been found there to date. There's a heck of a lot of it. It occurs over 4 by 5 kilometers of area looking down on Palace Green. It's quite a big system. It's basically a blanket of mineralization at the base of the Walsroshian limestone. And it occurs, so if you think of the blanket analogy, there's thick parts of the blanket and thin parts of the blanket. And so you need quite, I think there they were drilling quite a bit. And maybe the meterage is because the bulk of it is basically on the deeper end of things. So you're talking maybe 500-600 meters, 700 meters down to 1.1 kilometers. Again, that's publicly stated in the reserve report annually. So I think that a lot of the meterage is attributable to that because you're doing deep drilling, right? Whereas here we are at sort of 300 to 400 meters depth, relatively shallow. And as we follow it, we're not following down to 700, 800 meters. We're following it along strike. That's where the hotspot is. So for us, it's more of a linear zone so far that's very continuous over that 2.6 kilometers. And it's only 300 meters to 400 meters worth of drilling. So I think we can be a lot more effective. Plus the geo statistics here seems to be a lot more simple, perhaps, because instead of getting these patches of thicker zones, as you see at Palace Green, here it seems to be a very continuous swath of mineralization. So again, when the engineers are putting a mineral resource estimate together, they look at the variability. So when you step out 50 meters, do you hit it again? If not, that's a problem. You may have to do 25-meter centers. Okay, you might hit it there, but the next 25-meter center, maybe you miss it again. So that creates a lot of problems for when you're modeling a mineralized zone. Here, thankfully, so far it's been pretty much, we're doing these 180-meter step outs. We're doing in April, we stepped out 530 meters, 930 meters. We continue to hit, pretty much as straight as an arrow, that mineralization. So the geostats here should be quite amenable to us not having to drill in very tight drill centers. So hopefully we can get away with 100-meter centers or something. It's up to the we're not at that stage right now. I think right now for group 11, what we want to do is, what are the boundaries? Where are the boundaries of this thing? Where are the hot spots? The last drill hole that we just announced is 30 meters of 11% with 80 grams. It's a fantastic hit. And that's really important because all of a sudden the tonnage potential, just goes up tremendously when you got a zone like that. And if we're on the edge of a nice thicker package of mineralization, like what you see at Lachine as well as our direct geological analog, you have these patches of high grade. And if we can tag onto that and continually hit, then maybe the geostats will be simple enough for us to be able to only drill every 100 meters and still get some kind of a resource. But again, I think we're at least a year away from even thinking about that right now. Right now, we just want to check the edges and see where the hotspots are.
How many meters have you put into this thing so far?
We've drilled 29 meters, 29 holes. And each hole is about, call it 350 meters depth on average.
So you're very early on.
Yeah, we're very early on here. Yeah, only 29 holes.
Okay. How many, well, yeah, in terms of meters, because you say a year or more, but like in terms of meters, how many more meters would you want to put into this thing before you can come out with an inferred resource? But then you said that it's 100 meters in between that you can drill. So you can, what are you going to go like directly to M&I or do you do inferred first?
I can't answer that right now because I honestly don't know. I would assume we'd probably do an inferred first. That's the natural progression of things. But I assume, yeah, I assume like what we're doing is we have some pretty good control and good spacings along a section, and then we'll move over 180 meters and do another section. Maybe, like what we did in April, we stepped out 500 meters, did a section, and 900 meters, we did a section. So we're going to have good control along those sections. So what I don't know is how many sections are we going to have to drill before the engineers allow us, allowed to put a number around it. So again, I think it's a little too early for us to say that because we don't fully know the geometry. We don't know where the blowouts are yet. Hopefully, we've just hit the beginning of a blowout. Fingers crossed with this last hole. And so, we really need to investigate that. The nice thing is we're chasing it up dip, so it's getting shallower and shallower. If we follow it 500 meters to the north, we'll basically have this horizon just below the till, so it should be pretty much right at surface. So the drilling should be faster and faster, cheaper and cheaper, shallower and shallower as we move to the north, and hopefully that's where the whole zone is going. Maybe that's where this blossoming zone, hopefully that I'm hoping for, that we're all hoping for, continues.
So there's no reason for you to go deeper and do 600 or 800 meter holes.
Yeah, if anything, we're certainly in this area that on the back of the big hit that we got in last week. We're following it up dip, which is shallower. So, yeah.
Okay, good. What is Glencore telling you about this? I mean, are they really telling you anything like, oh, get this to, that meters of drilling, and then we'll talk more seriously about potentially doing a transaction?
No, those types of discussions never happen. So it's more about if we have any questions or they're interested in what we're doing, that's all fine and good. So and of course they see everything in the news. So that's the nice thing about being public is super high transparency on what we're doing. So look, I can't speak for them or what's going through their mind. I just know the fact pattern is they invested in us $2.5 million, and they've got a director on our board, and they continue to be active on their side of the property boundary. So I think that bodes well. You never know. Obviously, dynamics change, but it seems like Glencore likes Ireland and likes the rocks there.
Right. How much more drilling is it left in this program? Because you're drilling now as we speak, I think, right?
Yeah, we got a 2-rig program ongoing, and we're drilling. I mentioned the C anomaly, so obviously we're drilling in and around where we got the big hit, but also we're moving towards the B anomaly, which is actually a very strong anomaly, but we haven't actually tested it, and so that's where we're doing right as we speak, with 2 rigs, and then interweaved in that as the year progresses, we have to start working on the Stone Park project, and that involves the Carrickettle West project. So we're going to be putting out. I'd like to put out a news release on just exactly what we're doing at Stone Park this year in the not too distant future. But that's this Carrickettle West target that I mentioned is a potential doppelganger to the Palace Green deposit. So we're going to be drilling in and around there, number of holes. I'm really looking forward to it. It should be quite interesting. The geology there is really intriguing.
When do you want to have the results out from what you have going on right now, though, the 2-rig program?
The 2-rig program at Ballywire, I expect will have it's still a number of weeks away. For me, the golden rule is to have a news release out every 6 weeks. That's typically what we aim for. It's been a little bit more extenuated this year over the last few months because there's been so much meterage coming at us with a 2-rig program. We usually have 1 rig going at once because now we're kind of drinking from a fire hose with all the meterage coming at us. And we have to, log it, split it, send it to the lab, etc. So it all sort of slows down a little bit. But the upside of that is every time we do put out a news release, it's usually 4 holes, maybe 5 holes, etc. As opposed to the old press release, maybe have 1 or 2 holes in it. So the production is up, but the frequency of news is a little bit more extenuated. But I think, yeah, over the next that kind of time frame from June 11th, which is our last press release, would be expected. And in the meantime, hopefully we'll have an update on Stone Park.
Oh, in the meantime, so before you have, okay.
Yeah. So ideally, if we're lucky and get everything together on the plans here, we'll have an update on Stone Park, and then we'll have the next batch of results on Ballywire.
Right. Okay.
Yeah.
How much money is Ballywire going to have cost you once you have completed drilling?
So I mean, typically we drill about 5 to 7,000 meters a year. I think all in right now for the year, we're going to be probably pushing on the upper end of that goalpost. Maybe even go a little bit higher this year, just because we're really onto something. I think so. Your question was, how much are we going to spend this year on Ballywire?
Yeah. How much are you paying per meter?
It's actually relatively inexpensive. 150 Canadian dollars per meter is what we're spending, which is relatively cheap to some. I hear of numbers out there four, five, $600 per meter.
That's Africa
So
prices that you're giving me here. Yeah.
yeah, and the reason is because you just drive up with your trailer, park and drill. I mean, it's just that easy. That's the level of access we have in Ireland, and so there's no cliffs, there's no helicopters, there's no cribbing off the side of a mountain or anything like that or road building, anything like that. So it's relatively easy, and so that that shows up in the relatively very very decent prices per meter drilled. 100 it's 100 euros per meter roughly.
Okay.
Obviously that's our currency, so it's
Is
about
that all
100 euro.
in?
That's all in, including maybe 110 if you include all the assays and everything else. But mind you, we don't assay all the entire hole usually, like you would in a porphyry or in a gold system, because here the ore or the that mineralization of the massive sulfide is clearly visible. So what you do is you usually know whether you hit something or not. Sometimes you may not be sure. You assay a little bit, but you're only typically out of a 300 to 400 meter hole, you're only assaying maybe 10 to 15% of it. So that
Okay.
keeps costs pretty low as well.
Right.
In an ideal world, if money wasn't an issue, then yeah, I'd probably want to assay everything. But
Sure.
realistically, in Ireland, that's typically how it's always been done, and there's a rationale for it.
So 110, 165 Canadian, something like that, 7,000 meters, $1.1 million basically is what you're going to have spent on drilling, as far as I understand it this year.
Yeah, and as you said, the 60/40 breakdown of admin versus exploration, so call it two.
Okay. Yeah. So two million bucks. Um, you're gonna have spent what at the end of this drill program. So there's no need to raise before that because you had 2.4, 2.7, excuse me, you had at the end of
Yeah,
last quarter. You've
yeah.
burned through some of that, but you still have enough money to finish it, I assume.
Yeah. I think it's all funded. I think that's relatively um we're relatively confident we're fully funded for the whole year, including all the stone park work.
Okay, good. And then, okay, so you want to have all the assays out before you actually have to go and raise capital. You don't have to raise this summer, during the
No,
summer doldrums or something.
no.
Good, good. What about permitting? You said there's infrastructure stuff like that, but so you don't have to fly in the drill. You don't have to make trail like drilling pads and stuff like that. You probably don't have to do any of that. But how's permitting in Ireland?
Well, in Ireland, it's works really well, and we rank typically very highly on the Fraser Institute for the Policy Perception Index. We're typically in the top of the pack in terms of the 90 jurisdictions that typically get analyzed in the mining in the annual mining survey. So that's number one. I think the numbers just came out. We're number 3 in Europe right now in terms of policy, mining policy. So it kind of works in a very simple way. So before you even get the exploration licenses, it gets advertised in the local paper for 60-ish days, if I recall. People have an opportunity to ask questions, and if there's any objections, that those get answered, or if there's serious objections, you just don't get the license. So that's your first hurdle. And so obviously we got those licenses years ago. And then before you do any work, you have to get the permission of the landowner. And every bit of Ireland is usually owned by somebody, unless you're in the mountains somewhere, Donegal. But in the rest of Ireland, and certainly in the Irish oil field, there's always somebody that owns something. There's usually a dwelling and a big farm around it. So that's no different for the areas that we've been working in. And generally, unless it's somebody living on their own, elderly person living on their own that doesn't like to talk to strangers, usually we don't have a problem, and that that doesn't typically come up. But we have had once or twice where people said, no, we don't. They won't open the door for us or something. And if that's the case, we just don't go there. But so that's, I guess, a number two thing to say. So generally, having someone that liaises with the community is part and parcel of what we do, and that's probably the most important thing that we do. really is to make sure we clean up after ourselves and that we do what we say we're going to do and be very courteous local. So that everybody knows what we're doing ahead of time and has given us permission before we do any drill hole or any soil sample or any geophysical survey, et cetera, et cetera. So that's just kind of how it works here in Ireland. And that seems to be a pretty good system. So I think permitting wise, knock on wood, but seems to be working.
Is that time bound? Like, do you have to renew your conversation with them every year or something? Or like, how does that work?
There's a 2-year, that's more with the government. So you can choose to do nothing and then just surrender the ground if you want. But obviously, if you're keen on the ground geological perspective wise, you have to do a bit of work, a minimum amount of work every 2 years. So you don't have a 12-month window to do it, and you have a 2-year window, 24-month window to do your work. And usually per license, a license would be about 35 square kilometers in size. And each license has like a zip code on it. So a very specific, unique number. All through Ireland, there's a specific zip code for each. They're called PLs. And if they haven't been worked for a while, then it can be down to like 5,000 euros per 2 years. So it's on next to nothing. If you've been working it consecutively for years, then maybe it gets up to 60,000 euros per 2-year term. So it's still relatively reasonable. Obviously, if you don't want to be holding a ton of ground within Ireland, we were at one stage at Group 11 the largest license holder in the country, more so than Teck, more so than Glencore or Boliden or anyone else, and that really burns a hole in your pocket. So you really want to be quick about how you do a first pass exploration, figure it out really quick, and then just start divesting and then keeping your core. And that's actually what we've been doing quite a lot of over the last maybe 3 years ago. We decided, okay, it's time to really hone in. And especially when we started figuring out the Limerick area was the hot spot. And in fact, the Ballywire was the real hot spot and Stone Park. So we've been dropping and surrendering quite a bit of ground over the years, and we'll continue to do that in order to really get focused in and lower our overheads.
Right, but there's no other obligatory land holding costs. You just have a work commitment. That's it.
Yeah, that's
Okay.
it. Yeah. I mean, there's in the sort of 5,000 range every 2 years for just a filing fee. That's kind of more of an admin fee. So, but that's really a small part of the equation.
Sure. Okay. Good. Good, Bart. This is giving me an idea of what's happening at your own 100% projects. What's happening at the rest of it all? You touched upon it briefly, I believe, but what is happening with the JVs that you have going on?
So we have 2 joint ventures, as you mentioned at the very top. There will be the jury's still out on what we're going to be doing at Ballymalac this year. Definitely not a core to our workings going on in Limerick. Then the Stone Park joint venture contains the Carrickettle West, which is what we've already talked about. This is that doppelganger target that we have. So that's within the Stone Park joint venture, and so we will be again laying that out in a little bit more detail with the upcoming news release. So stay tuned for that. Again, Silver Mines is not something that it's not a joint venture, but Silver Mines is also not going to be something that we're going to be spending a lot of time or effort on. It's really all about the Limerick area for us.
Yeah. Is there an option for you to use some of that as a creative financing tool? I mean, give away part of it to the joint venture partner and get someone else in. I mean, just get cash so that you can focus on your Limerick area.
Yeah. I mean, that's a wise thing to always be looking at. As you get more advanced on one asset in particular, see if you can use the other assets to help finance that one. So we're always looking at things like that and creative solutions, especially as the market environment changes, et cetera, et cetera. But nothing definitive as of yet, and I think it's always good to have good assets in the background because you never know, especially global zinc mined grades of zinc right now. South 32 just put out a press release in February, and they talked about zinc grades globally halving since the early 2000s. They used to be about, I did a little bit of background research on this. It seems that, as you would expect, about 10-11% back in the early 2000s. Now it's like 5-6% is the global zinc grade out there. So having, even at Ballymalac, having something that grades 9% is actually not too shabby given the global perspective right now. As more and more low grade deposits get put on stream, or maybe open pit zinc projects, etc. So it's nice to have something that is maybe going to appreciate with time, and those deposits do still have blue sky potential around them. It's just that when we started the company, our modus operandi was to try to find something brand new and not basically chip away incrementally on an old project. We want to find something brand new, turn the page, and start fresh. And it's paid off in that so far with Valleywire, and hopefully with Carrickville West. But that's really why we haven't gone back to the deposits that we have.
Zinc is an interesting market as a whole. It's either that nobody cares about it or everybody cares about it at the same time. And then you can kind of see it in the price too. I suppose I could ask, how close do you follow the zinc market? How closely do you care about it?
Well, it's definitely on a certain level. I look at it all the time. I look at the inventories. I look at the TCs, which are fascinating. Right now, the outlook for zinc is actually all this year has been quite bullish, quite positive, and it's turned quite bullish on the back of a lot of mines turning off, shutting down over the first few months of this year. And so I don't know if you follow treatment charges, but treatment charges, basically a background on treatment charges is the lower the treatment charge, the more smelters are competing against each other in order to attract that concentrate from the miners. So right now the treatment charges are they were last year about 270 US dollars per ton. This year we were assuming the brokers were assuming about 200 or 180, so much lower, so much more of a bullish assumption. And the actual benchmark deal that was done between Korea Zinc and Teck April this year was 160. So 270, 180, and 160. So it's actually getting lower and lower. And spot TCs are supposed to be now next to zero. And actually, I heard negative, which is, I believe, unprecedented. So there's a deep deficit in the concentrate market right now, which is really fascinating because you're not really hearing any buzz about that in the broad market. So I'm not sure if it's just a temporary thing or an artifact of some kind of arbitrage between China and the West in terms of TCs, but certainly treatment charges, it's probably the best bellwether for near-term outlook on zinc price over the next 12 months. Look at the TCs. TCs have absolutely dropped off a cliff and are down at very, very low levels right now. And that basically tells you that the smelters are really desperate to get their hands on concentrate, and they're willing to drop their prices to rock bottom and even pay the miner to take their concentrate off them, which is what negative TCs means. So I kind of track that end of the market. I track obviously close to home here. Actually, you mentioned Tara. Tara is one of the mines that recently shut down. They had a flooding incident about 2 years ago, and it really tripped them up. So they shut down temporarily. They're just now looking to restructure costs. And from what we read in the papers, supposedly they'll be up and running in the next few weeks, albeit very slowly. They're looking for some voluntary redundancies, and then they should start back up and running, be at full production again in January. So that's one of the mines, but there's also a mine in Tennessee that shut down. There's one in Spain. There's one in Australia, a big one, MacArthur River. So there's 18 supposedly mines around the world that have been impacted recently. So it's a supply side story leading to a concentrate shortage. The refined side is still relatively in balance. So it's no alarm bells going off on the refined side, but certainly on the concentrate side of the metal, there's definitely alarm bells going off on that side. But again, I think the broad market doesn't care too much about it because of the delay in the US Fed interest rate drop. So obviously that's taking everyone, and then the videos of the world.
I wish I had something intelligent to say there. I wish I had something intelligent to say most of the time. I don't.
Me too.
But I don't. There's not the zinc market is not something I've been following closely because it's kind of hard to get. What's hard to, and this might actually be a good point because it's kind of hard to get people, interested into it or kind of excited about it. How do you keep, and this is like kind of, I suppose it's kind of your job, keeping people engaged in the meantime. I mean, zinc is hard enough to get people excited on, if I'm to believe the likes of Brandon McDonald, but then also now you're going to have the Canadian tax thing working against you, where they're going to higher taxes soon, as well as then you have the summer doldrums, as we mentioned earlier. So how do you, and that's kind of your job, right? Keeping people excited and engaged in the story. How do you manage that in a period like this?
Hitting high grade. It always gets attention. So, I mean, as long as we have a world-class jurisdiction, good people on the team, and hitting some high grade, almost doesn't matter what commodity is, as long as it's high grade enough to capture the attention of the market. The other key thing I think is there's not a lot of players. I mean, if you look at the zinc space, okay, if we were in a commodity that nobody cares about, but there's 1,000 zinc juniors out there, yeah, it'd be impossible. But there's only really a handful of zinc juniors out there in the Canadian markets anyway. There's definitely some over in Australia as well, but in the Canadian sphere and Canadian listed sphere, obviously I live in Ireland here, but in the Canadian listed sphere, there's a handful of companies that are doing zinc, and some of them that have been doing zinc have added other assets, other commodities to the mix in order to try to get that additional attention. But we've basically chosen to, be very Irish centric, very zinc centric, and just really double down on that and try to get something world class. Because I think if you find something high enough grade, you will be cycle proof in a certain way. Like I think it is true. If you find something high grade enough, and if it's of obviously a minimum required tonnage, then you will make money in all parts of the cycle, unless you've got a late 08 event or something, sustained late 08 event. But you should be fine, even in the up times clearly, but in the down times as well, in the troughs of the cycle. So I think that's really our best defense, is getting high grade and going after high grade deposit, as opposed to the other way to play resources. You get something that's out of favor and you pick up low grade copper porphyries or something when nobody cares about copper, and then let it rip when copper price goes up again, and those things go from zero to $1 billion valuations, So there's two ways to play it, but you need to survive the winter in order to get to the harvest. And so what we've done here, and the geology here lends itself to that, is go after the high grade. Everybody cares about high grade. Obviously, it's very nice to see the germanium in there. I think that has captured the imagination of some people. Having silver in there, I forgot to mention, but having silver in there is very important for us, especially now, where we can point to some really high grade silver numbers. That'll keep everything afloat in terms of your any future financial models on hopefully what will be a deposit. So all those sweeteners are really critical. And certainly a lot of people care about silver. So a lot of people are going to be, at least looking at us from the side and saying, that's probably an interesting one, as well as a sort of a cryptic silver play, or sort of a silver play in disguise. And maybe even if we get lucky, there'll be a little bit of a copper angle to the story at some stage here too.
I think no one said it better than Jack Dempsey, who said the best defense is a good offense. And so in your case, that's go out and drill, come out with these results. That makes sense. Yeah. Good. Bart, I've been through most of my questions that I wanted to ask you. Definitely forgetting a bunch of stuff, though. I have a lot of notes here. What am I forgetting to ask you? What should I be asking here?
I think we covered all the bases. Clearly, on the asset level, we've covered all the bases. Ireland, politics. There's one really interesting point that we didn't touch on that I'm thinking of right now, and that's that Europe is really getting serious on metals. So I don't know if you heard, Antonio, but there's this CRMA thing. This is the Critical Raw Materials Act that just got passed in April, and it basically is streamlining and fast tracking all mining projects within Europe in order to lessen the reliance on China and other Eastern sources of supply. And so they've enacted this now, and in parallel on that, the Irish government has basically taken taxpayer dollars, which are based within the Irish Strategic Investment Fund, the ISIF, and they've publicly stated that they will deploy or invest 30 million euros, so call it 50 million Canadian dollars, 30 million euros roughly, of money into Irish mining, Irish minerals, Irish mining. And so they've teamed up with Lionhead, and Lionhead is a mining-centric investment manager out of South Africa with a global reach. So they're very, very much mining specialists, mining finance specialists. So they've teamed up with Lionhead, and Lionhead is basically kicking the tires on all the projects in Ireland right now to see where best to deploy that capital. My guess is that they would be looking at the nearest to cash flow projects out there possible. And there is one as an example, just to give a nod to, and that's Galmoy. The Galmoy guys, Shannoon, are restarting Galmoy. That's basically 2 million tons that Lundin basically, when it shut down the Galmoy project with the Galmoy mine years and years ago now in 2012. They left 2 million tons of high grade down there because they wanted to focus on Candelaria. So the ex-Lachine guys basically teamed up. They knew what was going on there, and they basically went after that. So as far as I know, that's that's pretty much turnkey. As far as I know, the permitting hasn't been an issue, and it's just waiting for funds. I'm not sure where they sit with that, but that something like that really provides some comfort and some additional comfort maybe for investors investing in Ireland. Tara should be up and running again. I'm not sure. Tara probably doesn't need ISIF money, but certainly it's really positive to see that on the European level, there's definitely a recognition that minerals are important and should be a focus for the green transition, and within Ireland to see that. And don't forget, we have for the time being anyway, we have in terms of the government structure here, Fianna Fáil, Fine Gael, and the Green Party. It's a coalition government here for the last few years, and the Green Party was very much alongside with sustainable world-class type of mining operations in order to, if we push off oil and gas, which the Irish government has put moratoriums on oil and gas, but they definitely need to embrace the metal side of the picture, especially when it comes to zinc, which is really a really key metal for the energy transition. So I think that's something worth mentioning.
Do you think that that is worth mentioning? But do you think that with the greens now kind of being pushed out at many countries in the European Union, at least it seems so, looking at some of the voting that happened on June 9, do you think that's going to change some of that? And do you think there's going to be less money for metals and exploration, mineral exploration as a whole?
I don't think so. Not in Ireland anyway, because there's a big push towards wind power. Wind power, I think, is seen as a no-brainer future for Ireland, because we have some of the strongest winds in Europe. So off the west coast of Ireland, the wind there is 20% stronger than the rest of Europe. And Ireland owns a ton of ocean outside of the land. It's 7 times bigger by ocean than it is by sea than it is by land. So it's a huge country if you look at the sea area that Ireland owns. So and there's been a lot of work put to on the east coast, 5 gigawatts of power, offshore wind turbines, fixed bottoms. These are shallow sea, so they can be fixed to the bottom, just standard traditional. On the west coast, it's going to be deeper sea, so those are going to be floating turbines, a little bit more tricky, maybe a little bit more costly. But there, the name of the game will be split water using that energy. So hydrolysis to create the hydrogen, take the nitrogen from the air, combine it together to create that ammonia, which is very easily shippable. And I think post Ukraine and everything that's happened there, and the energy crisis that we had and are continuing to have, a lot of countries are knocking down Ireland's door and saying, get your act together here, which they have, and really fast track the wind power. And the Green Party is very much a part of that. Now, it's obviously not all easy. Like I think that most people, I think, would be on side with wind power in Ireland. Then there's other aspects like methane and other areas which are a little bit touchy, or bike lanes and this type of stuff that seem to dominate local politics. But in general, yeah, Green has had a little bit of a falling off, as you say, Ireland as well, with the local elections. But I don't think the Green agenda has anywhere to go but to continue, and to probably, especially on the wind power side. So I think the recognition that we need the metals if we're going to push away the oil and gas is only going to continue to grow in momentum.
Very good. Well, thank you, Bart. Hopefully you can keep delivering all those grades. You've been doing a good job so far. This was an educational conversation, and I really appreciate your time. And hopefully you can come back and talk to me about them in the near future. I'll let you drop off now, though, as I have one more person waiting to talk to me today, for whom I will have to travel to Canada, Saskatchewan specifically. But I'm not going to be looking for uranium for once. This time I am looking for nickel, and hearing about it from Ian Fraser, the CEO and VP Exploration of Fathom Nickel. This company is listed as FNI on the CSE exchange, actually, in Canada, where an average of about 520,000 shares trade each day, with a 52-week high of 35 cents and a 52-week low of 3.5 cents. With a market cap of about $7.5 million and about 140 million shares outstanding to date, this is a 5-cent stock. There are 52.3 million warrants and 6.5 million options, leaving the number of fully diluted shares at about 202.6 million. Management here owns about 4.8% of the company. 34.6% of the company is owned by institutions, and then the rest is in the hands of retail investors. The last financial statement, which is dated March 31st, shows me $2.7 million in current assets, most of which 1.4 million at the time, to be specific, was in cash and cash equivalents, and about 700,000 in prepaid expenses. I don't see any long-term debt, but I do see $550,000 in current liabilities. And that same financial statement from March also tells me that on average, over the last reported 3 months, Fathom recorded about $150,000 a month in administrative expenses, mostly in the form of investor relations and capital markets consulting, whereas about $670,000 went into exploration expenditures per month on average. That is mostly focused on the Albert Lake property, which might be different in the next period, and I'll tell you more about that in a second. In terms of ratios, that would mean that about 82% of the total burn here went into the ground, and so less than 20% into what I call bureaucracy. As it always is, though, I would like to remind you that this is nothing more but a snapshot in time, and this financial statement that we're looking at is just from March of this year. So it's just a snapshot in time, and finances will have changed by the time you're watching this. So please head over to the company's website as well as setterplus.ca to look at all the numbers yourself to make sure that you're getting the full picture. As always, we have a lot of fun with accounting here and disclaimers in this show, but we're not here for fun. We're here for nickel, supposedly, or maybe gold. Who knows? We'll talk about that as well. As I alluded earlier, though, there are two main projects to be talked about here. First up, in the main focus so far has been Albert Lake. Fathom holds a 100% interest in what I would dare call a vast expanse, although that might be a word too big for my brain. The project covers over 90,000 hectares of land. It's in Saskatchewan. It's to the southeast of the Athabasca Basin and directly to the north from Ramp Metals. They recently had a big gold discovery, which is an interesting angle I hope to touch upon later with Ian. But so within this land package that Fathom is sitting on is the historic Rottenstone mine. Now, this isn't just any type of old mine. Back in its heyday, I suppose, was in the late 60s, 65 to 69. Although very briefly, as far as mines go, this thing was pumping out some decently high-grade stuff. We're talking about 3.3% nickel, 1.8% copper, and a good almost 10 grams per ton of PGEs with some gold in there as well. And then fast forward to today, and some things are happening in the region again with the Bay Island trend discovery having been made there and showing a continuous ultramafic hosted nickel mineralization on stretching to over 300 meters now. Fathom has drilled 60 drill holes for a total over a little over 10,000 meters since going public in 2021, and the grade is not as high as the historic grades. But there is mineralization on here, right? With some intercepts showing 0.6% nickel, 0.3% copper, and 0.63 grams per ton of PGE with some gold, and that's over 13.3 meters. Fathom likes to believe that this is just the beginning, though, for this project, as the project area is dotted, if you will, with soil geochemical anomalies, and they now have high priority drill targets that they will hopefully get to drilling again soon. Something I'll be looking for an update later on in the conversation. As I already mentioned, though, there's another project here. It's Go-Sugar Lake. It's also 100% owned project. This is a smaller, though by no means a small project. It covers 22,000 hectares and also housing some historic work on it in the face of the Go-Sugar Lake deposit. The old drill records here talk about a resource estimate of 4.3 million tons, which was its lower grade, so it was grading 0.3% nickel and 0.08% copper, mineable in an open pit setting, and so containing 1.8 million tons of what is an almost 0.8% nickel equivalent, which might sound on the lower end if you think about it in terms of cobalt too, because that's on here as well. But that's because cobalt was not included in that grade equivalent because I suppose it was the 60s and nobody really cared about cobalt at the time. Fathom does, though. But Fathom's most recent activities here, though, which include a total of 16 holes for a total of 5,500 meters being completed, are showing a different kind of grades, really. As high as 58 meters of 1.3% 0.5% nickel, 0.4% copper, and 0.11% cobalt, which was within the top 10 best nickel holes for 2023, according to the Northern Miner. That's not the only thing that's getting Fathom's geos excited, though, because the area around Sugar Lake is also showing some potential with multiple nickel, copper, and cobalt shoots having been identified, and borehole electromagnetics, which is we're going to call it BHEM from here on, just to keep my tongue muscles in check. Those surveys have lit up with several off-hole conductors, which means that there's a decent chance of finding something more here, which the team believes warrants more drilling. And so that's a new focus for the company. But there's some work to be done here before that. And there's also really other things happening in the region. Again, referring to what Ramp Metals drilled earlier this week. So Ian, this actually might be a good point to pick it up, because you've I'm just going to assume you've seen that hole, and you've looked at the geology there. Is that something you can, I mean, is there any bearing to Fathom? Is this something you can use for your own exploration efforts? And does this really change anything for you here?
To answer the last part of your question, Antonio, no, we're going to stay completely focused on nickel copper PGEs. But any time a neighbor hits a hole like that, you can't help but take note. And of course, they do butt right up to the southern part of the Albert Lake project, and that immediately forced me into going through our own. We flew a gradient magnetometer survey over the entire 90,000 hectares in 2021, and they do reference what they refer to as their eye-like feature to the south. Well, that continues on to Fathom's property, and anytime you're looking for gold, you need structure. And so, of course, I'm immediately looking at the structures that continue from the Ramp property onto the Fathom property. And yeah, I mean, we've definitely taken note, and I congratulate them. It certainly garnered us some more attention as well. So that's always a good thing.
How far are those drill holes from where you could be drilling?
The southern part of their property, or the southern part, sorry, so the southern part of the Albert Lake project, and their drill hole is roughly 5 kilometers south from that boundary. Okay. And then from the very bottom of our property up to the historic Rottenstone mine is another good 30 kilometers.
What they found is very interesting, because geologically very interesting, specifically because of what it's hosted in, right? It's hosted, I believe, in granitoids, so gabbro-diorite stuff. Very complicated words for me, but stuff like that. Are you seeing any comparable prints in terms of fingerprints in terms of the mineralogy, albeit secondary or primary mineralogy, with what you might have?
Yeah, I'd have to say that what they've illustrated there, that is it's, if you want to lump it into another term, I would call it a paragneiss, and these are they use the term granitoids, but essentially they could be remetamorphosed. They could be just metamorphosed sediments that now take on the appearance of these granitoids, and this is what we have. In and around the work that we've been doing is these, metasedimentary rocks that have been metamorphosed, and they take on a coarser texture, and they become almost granitic in their appearance. And so that trend is a very, very prominent north-northeast trend that goes certainly right through the Ramp disposition and onto the Fathom disposition.
So you don't necessarily think that what they have is a granitic intrusion?
It's very difficult to say, without any sort of a detailed geological map. Yeah, so the short answer there is no. I don't really know if that is a granitic intrusion or not. I really don't know. I haven't seen enough of the rocks or my own knowledge of the geology of that particular area.
Yeah, Ian, I'm not a geologist, so you could have just lied to me. I would have believed you. But let's talk about what you are doing and what you have going on, and maybe let's split the conversation into two parts. The majority of it is going to be focused on Sugar Lake first, and then we'll go into Albert a little bit towards the end. But Go Sugar Lake first, because you just got some assays back from there, but what, about a month ago or something like that? And it also seems to be switching your focus here, if I read it correctly, right?
Yeah, that's a good point. Yeah, I mean, the markets haven't been very favorable of late, and you know, it's becoming increasingly more challenging to raise funds to explore as aggressively as we would like to on both projects. So based on the work that we've done at Go Sugar and knowing what we know, we feel that there's a quicker avenue to a potential resource. You know, there is that historic resource at Go Sugar. I think what we've done in just over a year, and you know, just over 5,000 meters of drilling is really quite remarkable in dissecting this thing and understanding it, and then essentially at the same time putting it back together again, because that historic record is lost. So knowing what we know now, we feel we can build significant tons, and you alluded to the borehole EM earlier, and that seems to be pointing us to where we have buildup of sulfides, and we know when we have a strong borehole EM conductor, we're intersecting a semi-massive to massive sulfides, which are nickel, copper, cobalt bearing. So I think there's a quicker path to a resource at Go Sugar Lake. Albert Lake is just on the shelf for the time being, but there's tremendous amount of clues that came out of the most recent drilling there that by no means, in fact, I think we've never really been closer to actually replicating grades that came out of the historic Rotten Stone mine in the area that we've been currently working on. So I hope I answered that question. So it just
Sure.
So I think over the next 12 months, our exploration efforts will be at the Go Sugar Lake project.
And that makes sense based on the grades that you're getting there too. Again, we're going to touch upon Albert later on. When you say quicker to get to a resource, can you get more specific on that? I mean, are you guiding any type of timeline? Like, when could we expect the resource here?
Well, again, you know, we're working from a historic resource. The drilling that we did in this most recent campaign, we have now recognized the full package of multiple intrusives. And we recognize that the intrusive that is hosting the Go Sugar Lake deposit, the historic Go Sugar Lake deposit, we've added a minimum of 100 meters to depth of very, very fertile. It's a mineralized gabbro. So this gabbro extends a minimum of 100 meters below the historic resource. We have drilled a hole 400 meters off to the northeast of the actual deposit itself. It intersected the mineralized gabbro. It has strong off-hole conductivity. So that gives us 700 meters of favorable rock, which I feel, knowing what we know now, is going to continue to deliver the grades that we've been putting out in our most recent press release. So, you know, I've been saying, given 10 to 15,000 meters of drilling, if we can finance 10 to 15,000 meters of drilling and complete that 15,000 meters of drilling in the next 12 months, we're in a position where, you know, and I'm glad you brought this up, because it's not going to be a 43-101 compliant resource by any means, but it's going to be something that, you know, will have a strike of X, a width of Y, and a depth of Z, and internally we'll have a pretty good idea of how many tons and how many pounds of nickel are in the ground.
Great volume density. I like it because it's easy. What's the density, by the way? It's ultramafic. It's in the 4s, I suppose.
Well, you know, that's a good question. And, you know, if I could revert back to historic Rottenstone, well, we did some specific gravity studies on that rock. And when it's mineralized, the net textured, you know, Harzburgite, the next textured Harzburgite with 30 to 40% sulfides in it, that had a density of about 3.2, 3.3. And gabbro is a little less dense than ultramafic rocks, and so I think we could lower the density down to, oh, I'd be reluctant to go below 2.8, but 2.8 is probably not a bad number.
Oh, wow. I would have thought it's way heavier than that. Yeah, I thought it was in the force.
No, I don't think
Yeah.
it'd be that high. We'd have to get in, and we're planning to get there. If we get into the chamber that's yet to be discovered, the massive sulfide chamber, then we can start throwing around those numbers.
I like talking about magmas, so we'll talk about that later on as well. But those grades were indeed interesting for this specific project. Again, based on what's come out of the ground historically, but even more interestingly, I'm wondering whether the whole thesis about how the nickel mineralization got there in the first place is changing now that you're seeing these things. Because again, you talk about that mineralized gabbro unit that contains interstitial disseminated magmatic pyrrhotite, pentlandite, and even some chalco, I believe. And that's over that 300-meter horizontal and 400-meter vertical extent. That's an interesting discovery in and of itself that's coming from this whole thing that I think might have been missed by the market. Market typically looks at grades and stuff like that. But how does that change your understanding of the region as a whole? And how does that change your approach to how you do exploration here?
Well, if we can focus on the word region, when we do these corporate presentations, and I'm not sure that it really resonates, but 10 kilometers to the southeast is the Mall Lake nickel occurrence. And this was, again, another outcrop, and it was drilled in 1967. In fact, the same people that were drilling Goshaker in 1967 drilled a couple of holes down there in 1967. And then this is sort of weird history, but the project changed hands in 1967, and another company went in and drilled 9 more holes in 1967, and they were getting up to 8 meters of 1.1% nickel, 0.03%, or no, actually a little bit higher copper. And up until last week, there was no mention of cobalt. And when I say last week, we had our own geological crews up there, and there's a core library in Larange. And some of the holes that were drilled in 1967 at the Mall Lake nickel occurrence are available to view. And we went in there with the PXRF and have confirmed that cobalt is present with the nickel and the copper mineralization in those drill holes. And when we plot everything up, it's Goshaker Lake all over again. So we have 2 significant, actually, if I can get into a third one, so there's 2 very, very significant nickel mineralized occurrences, one being a deposit, the other being a showing / occurrence with a few drill holes in it. But the nickel, copper, cobalt, and the host rock is the same at both locations. So I think what I'm trying to say here is there is a significant regional component to the Goshaker Lake project because you have 2 of the same styles of mineralization 10 kilometers apart from each other, which begs the question, how many more of them are there out there? And in between Mall Lake and Goshaker Lake, there's what we call the Boris Lake VMS zinc lead occurrence. And here is a very, very fertile belt that we now recognize as 3.8 kilometers in strike that has lead, zinc, and a little bit of silver mineralization. So this 22,000 hectares, the Goshaker Lake project, is incredibly well endowed with mineralization. And if I can go off on a little bit of a tangent here, the Thompson Nickel Belt and Snow Lake, Manitoba. Snow Lake is world famous for its VMS deposits, as is Flin Flon, but just to the east of Snow Lake is the Thompson Nickel Belt. And we know that Snow Lake, Thompson Nickel Belt are same age, Paleoproterozoic, 1.8-ish billion years ago, these things were forming. So we've got, getting back to Goshaker, we've got VMS, we've got magmatic sulfide, and I would guess that the age is exactly the same. So I think that just bodes well for the, to use the term regional. I think it's really, really quite exciting.
It is. when you think about it in terms of regions, it gets even more exciting because you're talking about size in that case. I do want to go back to the grade though, because that's kind of the thing that also, I mean, catches your attention in combination with all the other things that you're talking about here. Do you think that the thickness and the continuity of the higher grade zones here are influenced by the massive sulfide veins and the stringers because of their alignment with the vertically oriented chutes? Is that where sort of this higher grade is related to?
Another excellent question. And you were, I think I went off on another direction there, but you were asking that a little bit earlier. Yeah, so what we recognize now at Go Sugar Lake is it is a multi-phased intrusive. So with the drilling that we've done and our consulting group and our consulting team and our geologists, we recognize that there was let's call it event number one. So it was actually what we call a norite, and it intruded into probably getting back to that conversation about paranise. It's intruded the encompassing paranise and granitoids essentially, and then another intrusive event happened, and this is when a magma that was saturated in sulfide intruded this norite. And we know now that this sulfide is containing nickel. So this is why we get these, I'm just looking at a chart here where you get 170 meters of 0.6% nickel. Yes, some of that is semi-massive to massive sulfides, but the great vast majority of that is disseminated interstitial sulfides in this gabbro unit. And then there was a third event, and this event was the veins, if you will, of these semi-massive to massive sulfides that have injected into event number two. And with the lithogeochemistry that we've done and ripping apart the assays and looking at tenors and everything else, we know that the sulfide in event number two and the sulfide in the event number three are coming from a source, I'm going to call it event number four, that we haven't found yet. And another clue about this undiscovered event number four is in these semi-massive to massive veins, we're seeing inclusions, we're seeing xenoliths, we're seeing xenocrysts of a rock type that is not event number two and not event number one. So we think there's a significantly larger, very rich magma chamber lurking within the confines of the Goshager Lake deposit.
That answers the first question that I had, because I forgot it too after I asked it. But it was like, I mean, has your thesis changed based on how the mineralization got there in the first place? And so the answer is yes. You think it's this big magmatic chamber here. And why I'm asking these.
If I could just jump in there, sorry, Antonio, because I do recall your first question. So I'm going to use my hands, but yes, there is a vent, there is a feeder, and this feeder is saturated with sulfide. And so originally it was the mafic magma. So the mafic magma that already has inherently parts per billion nickel, copper, cobalt. And interesting enough, there's a scattering of PGEs at Go Sugar, but that's another topic. So this thing is, as it's progressing, working its way through the Earth's crust, it's taking in all the sulfur from the country rocks that it's ripping through, and then it gets completely oversaturated. So it becomes this massive blob of sulfide. And then with, I mentioned, event number one, event number two, and event number three. So event number three, if you can imagine that just being this, trying to go a little bit further, but it's just so dense, it's stuck in the vent. And, at any rate, so I think I'm trying to cartoon how this is possibly occurring. And if we can get into this massive sulfide blob, if we can get into the vent, then we're going to start seeing densities of 4%, or a specific gravities of 4, and we'll be in massive sulfides. And these veins have originated from that massive sulfide. I hope that made some sense.
It does make sense, because where I wanted to go with this is, and why I'm asking this, because, well, first of all, it makes me look smarter than I am on camera, which is always welcome. But also, of course, because the grade and thickness variability with some of these intercepts was apparent. I mean, at times it's 3 meters of 3% nickel equivalent with a decent copper credit to it. And then at times it's 185 meters, as you mentioned, long intercepts of 0.5% nickel equivalent with barely any copper. What's causing that, and is that related to what you were just telling me about?
Yeah, and why isn't there more copper? I don't really know if I can answer that question intelligently at this point. When we do when I say we, the team, when we do our homework, we start digging into nickel tenors and metal tenors, and there's all sorts of things that happen when these things are cooling, and things get removed and they get shoved somewhere else in this whole wonderful process of these magmatic events. But what is pretty consistent, though, is the ratios of nickel copper, regardless of whether it's semi-massive or disseminated. So I think that's just speaks to, when I talked about how much parts per billion were in there in the first place. There might have been, this particular magma might have been a little bit more nickel rich than copper rich in the first place. And perhaps when, you start ingesting and digesting, and the magma gets saturated in sulfur, I mean, that's, how it all sort of collects in the first place. So maybe that's an answer. But, and I think you were asking, and I interrupted you, and so the vertical nature of the veins, what is the control here? Well, we feel pretty good about how I'm going to answer this, because we were telling people that 1966 to 1967, they were drilling vertical holes. And we now recognize, that getting back to event number 1 and event number 2, if you map out the host event number 1 rock, and then the number 2 rock is injected into number 1, those contacts are vertical. And so if you're drilling vertical holes, you're not coming across that contact. And what we're able to do now is we're mapping out the higher grade mineralized sections, and these were part of the press release that we put out about a month ago now. The mineralization is conforming to the lithology of the package, which kind of makes sense. And here again, if you have these vertical shoots of high-grade nickel, copper, cobalt mineralization, and you're drilling a hole in front and a hole behind and not across, you're potentially going to miss it. So now that we've recognized the geometry, recognized the dynamics of this particular deposit, we're drilling northwest to southeast, we're drilling across event number 1, event number 2, and out into the footwall on the other side. We're starting to understand this thing, and the mineralization, it almost looks like, and I'm going to go off on another direction here, but if you can imagine a vertical contact, and just imagine there's a slight embayment along that contact, and you have these sulfide saturated magmas, event number 3, conforming to that contact, and there's suddenly a bit of an embayment, well, those sulfides are going to pool up in there. And if you're going to get a higher grade intercept. So this, this contact between event number 1 and event number 1 and event number 2, if the mineralization is conforming to that contact and you get a slight embayment or a fold or a hinge or something, that's a perfect trap for a buildup of sulfides.
And you now starting to better understand all this that's happening. Does that mean that you're going to start zoning in better and coming up with better results in terms of thickness and grade variability? Because that was part of the point there as well.
I'm going to say optimistically yes, but you know, the caveat is you can never really predict these things. But I think understanding the dynamics, understanding the geometry, and when you finish a drill hole, the borehole EM goes in there immediately afterwards, and it's saying, hey, there's something very, very conductive over there, you know, within 25 meters of your drill hole. And I think it's safe to say now that we're almost batting 1,000 with respect to following up on borehole EM targets. We're hitting consistently, getting into semi-massive to massive sulfides of, you know, grades of 3% over 4 meters and this type of thing. So if we can continue that process along the strike of this deposit, the strike is still unknown. I mean, we've got guys up there, guys and gals up there mapping right now, and they told me this morning, he said, you know what, the Gabbro contact is a little bit further to the north than we thought. So we don't know how big this package, this container rock really is. So I think there's lots of blue sky here.
But you're essentially chasing, again, as you just mentioned, the massive sulfides, which is, well, that's interesting because it seems that the sulfide mineralization here is in both disseminated and massive forms, and it shows comparable nickel tenor in both forms. How come? Or am I getting that incorrectly?
No, that's correct. It's just you know, and I think this bodes well for the project, and it bodes well for when the project is going to be, and I'm going to be very, very promotional and optimistic here, when the project becomes an economic deposit. The fact that you have good nickel tenors in the disseminated mineralization allows us to, you know, maybe lower the cutoff limit in when it gets to that point, when you start you know, talking feasibility studies and economic studies and whatnot, is, you know, maybe a lower cutoff grade, and this is purely speculative, Antonio. This is, you know, going into waters maybe I shouldn't venture into, but you know, let's just assume you could make a grade shell, make a pit shell using a cutoff of 0.3% nickel. And maybe that 0.3% nickel is closer to 0.5% nickel equivalent. You know, so there is a potential here for an open pit style of mine because of this nice disseminated, well mineralized halo around the higher grade shoots. And the best case scenario here, and this does come up in conversation, is, all right, so we have found event number 4. We have found that magma chamber, and that's, you know, a lot of people are saying, you got to go and find that thing. Yes, we do. Absolutely, that would be fantastic. But, you know, in a you know, forward thinking here, this is a deposit that potentially could be extracted. We know the mineralization comes to surface. You open pit this thing. You've discovered where event number 4, this feeder, this dike, this zone of massive sulfides, you ramp down from the bottom of your pit, and that becomes the underground part of the operation, which is very, very similar to a lot of projects around the world. You know, Boise's Bay comes to mind, and there's a project in Spain called the Agua Blanca, and here too, I think it was open pit, and then they recognized that there's some higher grade stuff that they could justify an underground operation. So,
but still different than what's in the previous resource, right? Specifically the disseminated part. I mean, that's new.
Yeah, I think so. You know, there was, you know, the, you know, historic drill hole I-12, for instance, drilled in 1967. There was 290 meters of 0.58% nickel, but down at the bottom, there was 9 meters that ran 2.4% nickel. And this is leading me into a discussion about cobalt. And they did sample, or assay, excuse me, they sampled it obviously for nickel and copper, but they decided, well, let's, you know, back in the day, let's see what cobalt came back as, and it came back at 0.14. In fact, in the records, and I think it was a mistake at the lab, there was an assay that was 2% cobalt, which is really quite unheard of, actually. So we knew that there was cobalt associated with this mineralization, but it just wasn't previously, up until we got in there, it just wasn't analyzed for in a systematic fashion. So, the historic did intersect some of this higher grade stuff that we're talking about, but not consistently, and I don't think with the understanding of how it was occurring that I think Fathom Nickel has now.
Would that mean that you want to drill deeper though than what they ever went to?
Based on our results to date, yes, this thing is wide open to depth. If this, event number 2, another term we throw around is the container rock. If this thing continues to be open at depth, we've intersected semi-massive to massive sulfides in this disseminated event number 2 rock at depths of 422 meters down the drill hole. That very first hole that we drilled this past winter, hole number 12, went to a depth of 551 meters. It's still in gabbro. So this thing is very, very much open to depth. And I alluded to the fact earlier that we really don't know how far it goes east and west. So we're going to drill deeper, yes. You got to be careful going deeper because they can be expensive holes and they tend to wander off, and that's something that's very, very difficult to control. So if you're targeting this and you're drilling a 700-meter hole, sometimes you end up missing because these things tend to come up a little bit and turn to the right when you're drilling them.
Deeper holes you're mentioning are more expensive. Yes, that makes sense. Given the remoteness of the whole story, what do you is this helicopter supported drilling that you're going to have to be doing here?
Another good point. In fact, we've got a draft right at my fingertips here. It could come out tomorrow morning, but we are in receipt of our exploration permit at the Goshagar Lake project. We currently are working under a permit that expires in July of this year. So we put in our application. That's been since granted. And we, the ongoing discussions with First Nations and the Lac La Ronge Indian Band, they've encouraged us to put in a camp at Goshagar Lake, which was the whole premise of the exploration application. The permit application is we would like to put a 20 to 25 person camp in there because that's going to lower our drilling costs significantly. So that's a significant development, and we're that was step number 1. I mentioned the 10 to 15,000 meters. We weren't going to do that without a camp. So now that we have the camp, and we're looking at means of moving a drill around on ground and not having to tear it apart every time we want to move it. So I think we'll be able to lower our cost per meter quite significantly over the next year.
What do you think that's going to be specifically?
In terms of dollar figures?
Yeah.
I'm going to say we'll move it down. If Doug, the accountant, was beside me here, he thinks I can get it down to 300, but I'm going to say I'd like to think between $350 a meter to $450 a meter, and that is all in, Antonio. That's not just straight drilling. That includes the borehole EM. That includes the rental of the camp. That includes hauling in the grub and the fuel and paying wages. So if we can get our exploration costs down to somewhere between $350 and $450 a meter, we're doing pretty damn well, I think.
Okay. Yeah. And this is, as you said, some of these things are, well, a lot of these things that we're talking about are forward-looking statements. This might be a good point for me to put in the forward-looking disclaimer on screen with everything that we've been talking about here. But good, 15,000 meters, 400, 15, 4, 6 million bucks.
Somewhere around there. Yeah.
Okay, good.
Yeah.
I'll ask you something about that as we go to Albert, because maybe you want to do some work there or not, but so we'll talk about that. But it's interesting that you say that you don't have to move the drill with a helicopter in that region. Is that all okay with the First Nations and everything? Like they're okay with you making inroads and tree lines and whatnot?
Yes, yes, the permit was very, very specific about we will make trails ahead of, so we're, I mean, and they understand, and this is the wonderful thing about the jurisdiction of Saskatchewan in general. I mean, they know exploration, and exploration is, pulling drills through the bush. You just want to, they roads, that's another topic. And there are some historic trails. They drilled this thing in the 1960s, and there was another small program in 1989, 1990, where a skidder from Highway 102 went in overland and pulled the equipment in, and you can still see those trails. So there's been some early discussion about possibly revitalizing some of these trails. And then, the other nice thing about Saskatchewan, it gets very, very cold in the wintertime. And, if we can use ice trails, if we can use roads across frozen lakes, and if the swamps are all good and stiff and frozen, well, then we can move drills over top of swamps. And so I think if we go about it very, very methodically and responsibly, without just, kind of crashing through the bush every time we need to move the drill, we're going to have a pretty good idea where we want to put drill holes in the first place. And it's just a question of making an organized network of trails. And yes, they're on board. And, it is an area where there are some cabins, and people visit their cabins, and nobody wants to hear a helicopter flying every single day. So they are encouraging a camp and less helicopters. So that's a very, very positive development.
Less mosquitoes would be nice too. I've heard the stories about Saskatchewan, and it doesn't sound too fun in the summer either. But so no summer drilling for you then. I mean, you're specifically focusing. You want to do this in the winter time.
No. With the camp, we'll be able to operate, with the exception of the freeze up late fall, and of course it's very, very dark into the early months of January, and very, very cold. But if we are at a camp, we are on the ground, and we're able to get in there, we could start as early as the middle of January and then go right through till, a perfect, let me answer it this way, Antonio, a perfect season is sort of mid-January through to mid-April. And then you got to get out because things start getting soft, and you're going through breakup, and we will be relying on fixed wing aircraft to bring in groceries and whatnot. And so if the ice goes out, well, there's a period of time there where you can't fly airplanes, obviously. But then summertime, you can go, well, let's say mid-June, right up till the end of October, when things start getting cold. But again, if we're on the ground, we could start pushing things a little bit. But it's not a pleasant time of the year, sort of late October into November.
I get soft when I go through breakups too, so I know how it is. What about, so when ideally, and this is financing contingent, I suppose we'll talk about financing too, but ideally, when would you want to start building the camp? How long does it take you to build it? And again, realistically, when's the first hole going to be into the project?
A lot of moving parts. Discussions have started with respect to the cost of the camp. And in the perfect scenario, the contractor said, I'd like to get going on this as soon as possible. And I said, yes, I agree. If things fall into place, and there's a lot of moving parts, and you will be asking me about the financing part of it, ideally, geez, I think it would be wonderful. We're drilling by the first week of September, last week of August, first week of September. And we were drilling out there last year in September. So I was up there the first week of September.
Okay. Yes, I will be asking about the financing, specifically related to the timeline of it all as well. In the meantime, though, are you doing something else? Are you doing any met work with the stuff that you got out of the ground this year, or anything smaller but important?
I would, what we've done thus far, and if you're asking specifically about any sort of metallurgical study, we've been able to do some microprobe analysis of our semi-massive to massive sulfides. The beautiful thing about the Gosher Lake mineralization, and maybe you've seen it in some of the press releases and some of the documents and whatnot. The pentlandite, the nickel sulfide, is very, very coarse in nature. So the pentlandite is hosted in the pyrrhotite, and the fact that it's so coarse, you can easily, with some fine grinding, that gets liberated and separates very, very nicely and will go off into its own concentrate. And then what we're finding out is there will be some nickel in the pentlandite that isn't going to be as coarse, and it might be finer grained, or it might be in what we call flame-like textures. So it kind of gets stuck, and the pyrrhotite and what little bit of nickel is left over, that ends up going to a tail, essentially, a tailings. So we understand now that the nature of the pentlandite is favorable for standard milling. What we don't know is what the recovery is going to be. Another thing that we have learned from our market probe analysis is there's a significant amount of cobalt contained within our pentlandite. So that's come as a bit of a surprise. And so there's up to 6 times more cobalt in pentlandite at Goshager than there are at, say, Sudbury, Norilsk, Thompson, Voisey's Bay, some of these other world-class nickel camps. So we've got a very, very unique and cool thing going here with the amount of cobalt that's associated with the nickel mineralization. And one final point on the metallurgy, that very first hole, hole 23003, 58 meters of 1.5% nickel, that is a perfect hole to twin again and take a mini bulk sample of that mineralization and send it off to a lab, and they'll be able to tell us, is this going to be 85? Is this going to be 90% nickel recovery? So that's something that would definitely be part of this next program, if you will. There's somewhere in that 10 to 15,000 meters. I would love to do a mini bulk sample of Goshager Lake mineralization for the purpose of a metal recovery study.
What kind of recoveries were they running again on the previous studies? Do you have any historical data?
There's nothing. Absolutely nothing. Yeah.
Okay. Fair enough. Let's that's Goshager. We spent a decent amount of time on it. Makes sense that's going to be a focus. So let's maybe switch the focus here a little bit to Albert, so he doesn't feel neglected. Because you certainly haven't been neglecting it before. You did decent work there this year. Maybe same high level approach here though as with Goshager, looking at the results of this year's drill program. Maybe from a helicopter view, is it changing anything for Fathom as a whole, or your approach to that project once you get to drilling it?
Yeah, I'm looking at the time here. Sorry, I probably got a bit long-winded on the Goshager here, but
don't worry about it. I've got time.
At Albert Lake, if I can summarize accomplishments to date, so you mentioned the Bay Island trend. That was very, very significant. That was proof of concept that the original rotten stone outcrop, that's not there all by itself. That the Bay Island trend, yes, there's a significant magmatic nickel sulfide system occurring at the rotten stone mine area. That's check mark number 1. 1.5 kilometers to the south, we have this incredibly robust multi-element nickel, copper, cobalt, platinum, palladium, gold, silver, soil anomaly, where we're getting over a gram of platinum, palladium, gold combined in individual samples of soil. I mean, that's amazing. A gram of PGEs in soil is really quite significant. And importantly, the pathfinders, the chrome, the magnesium, I mean, they're all there in abundance, and they all stack up beautifully. So what's causing that? So we our first attempt in 2022, I gotta get my years right. No, I'm sorry, 2023. We drilled 2 holes in 2023. We had a very, very tight budget. I won't get into that. We cut that program short, but we did get into some smoke, shall we say. And then fast forward to winter of 2024, we had identified through some surface geophysics this incredibly robust, very, very strong EM conductor at a depth of, roughly 350 meters below surface. We drilled that. It turned out to be barren sulfides. It was definitely sulfides. That's why it was so conductive, but there wasn't any nickel in the barren sulfides. And that's the risk you run with any electromagnetic survey. I mean, they are tremendous tools, but they don't always tell you or find what it is you're exactly looking for. So then we, a little bit of a pivot to that drill program, and we got a little bit more focused on just the soil geochem anomaly. And with our drill hole number 77, I won't go into any of the great details hole by hole, but hole number 77 hit ultramafic rock at a depth of 23 to 28 meters down the drill hole. So there's ultramafic rock there. Borehole EM tells us there's something that's weakly conductive just over there. And a couple of the other holes said, there's something weakly conductive just over there. The reason I'm saying weakly is because I want to contrast weak from strong, because the strong turned out to be the barren sulfides. But what's very, very interesting about the intercept in hole number 77, so let's just round it off, 4 meters, 5 meters of ultramafic rock, orthoperoxenite. And of course, our guys mapped it, logged it, sampled it. And when I saw the numbers, I just went, holy crap. There was one assay in there that was 0.9% nickel. And then when I looked at the amount of sulfide in there, the sulfide was, the amount of sulfur was less than 3. So when we were talking, semi-massive to massive sulfides at Goshagar, and we're getting 3% nickel in semi-massive to massive sulfides, and we're getting 0.9% nickel in with less than 3% sulfide, that's telling you that this is potentially very fertile rock, and it needs to be followed up on. So this is when we talk about high nickel tenors. This intercept in hole number 77 has a very high nickel tenor. And when we do the calculations, 10 to 12%, that's exactly what the nickel tenor is at the Rotten Stone mine. So the Rotten Stone mine, let's say, the net textured sulfide, 30 to 40% sulfide, yielding 3% nickel. Down here, hole 77, which is about 1.5 kilometers south, we're getting 0.9 with less than 3% nickel. The tenors are comparable. So that's a very, very positive development. And I think that's starting to validate this soil geochem anomaly. So yes, the chemical footprint in the soils is telling us that there is an ultramafic mineralized body below this blanket of very, very robust multi-element soil anomaly. So that to me is a very, very positive development. Obviously, it needs more work. And if we had lots of money in the bank, we'd be right out there drilling very, very closely to hole 77 to try and start following this ultramafic intercept, because this is the highway that will lead us to a well-mineralized ultramafic body. So I think that's a tremendous, tremendous development. And it's, unfortunately, it's going to be put on the shelf just for a little while because of reasons we discussed earlier.
That I suppose a natural follow-up question would be how eventually, when you go to follow it up, how do you follow it up? Because as you said, the nickel here is hosted in orthopyroxide, which is what the historic deposit was hosted in. You seem to be in the same structural trend that hosted the Rottenstone mine, but the overall grades of what you're coming up with, like when you run through the intercepts, are not the same. Like, right, the hole 77, you have the higher nickel tenor is in that hole and coincides with the geochemical anomalies and so on and so forth. But how do you follow it all up to come up with the grades that I mentioned at that 4 million tons of, what was it? The resource at the beginning. Yeah.
Yeah. They mined out 26,000 tons of 3% nickel and 10 grams PGEs. Yeah. So how do we get there? Yeah, that's an excellent question. What has me encouraged is, when we reflect back, and I've got a long history with the Rottenstone project. When I look at holes that were drilled in 2003, and yours truly was the geologist logging the core, hole number 29, for instance, comes to mind. And this was a hole that's 250 meters north of the Rotten Stone pit. We hit ultramafic rock right below the casing. Those nickel tenors are comparable to what I see in hole 77. Hole number 32, drilled in 2003 as well. That's 100 meters north of the historic Rotten Stone pit. Here too, an ultramafic intersection with a little bit of sulfide, but very high nickel tenors. So I for the life of me, I was, what does this mean? Does it point to the historic Rotten Stone deposit, or is it telling us there's something even bigger and better to the north? Well, my thinking now is maybe, nickel tenors are a means of vectoring into a pool of better mineralization. So optimistic me is thinking hole 77 is an indicator that there's a pool, there's a trap, there's a body of Rotten Stone-like mineralization, tons and grade to be determined, somewhere not too far away from hole 77. I mean, the only way we're going to find it is we're going to have to drill, obviously. But knowing what we know now is, maybe we can go back, we can tighten up the soil geochemistry in and around hole number 77. We've got off-hole conductors. Maybe we try and reconcile that with another round of surface EM. Just, tighten to try and see if we can vector into a pathway that's going to lead to something that's probably, a little bit further down at depth. And ultimately, best case scenario is if you had, a good budget, you might want to just say, well, screw all that other stuff. Why don't we just place 5 drill holes systematically, from north to south, drill them to a depth of 600 meters, and then do borehole EM. And maybe that will, knowing what we know now that we think we're getting that much closer, why don't we just start drilling? I mean, that is a geologist luxury if you can have that kind of a budget where you can just rely completely on the drilling effort.
Yeah, geologists like poking holes. If there's one thing that I've learned over the last 2 years, then that's that. How many meters of drilling do you think it's going to take for you to actually zone in, start coming out with these higher grades? And what I'm talking about here is really more than just. It's good that you're understanding the geology. What I'm talking about here is really coming up with those headline grades that are stock price moving holes, basically. How many meters is going to take for you to figure that out?
All right. Well, to that comment, something that's really grab the market's attention. Let's say, 10 meters of 3% nickel, and let's 10 grams of platinum and palladium. And when you throw in all the other 4 PGEs, maybe we can get that to 12 grams. So that type of intercept, if you were to give me, and I'm saying this selfishly, 3,000 to 5,000 meters. If I had 3,000 to 5,000 meters, I think I can find another Rotten Stone. There's a bold statement.
Yeah. Again, the forward-looking thing, but why you want to do 15,000 at sugar?
That's to demonstrate a volume. If I'm going after just an intersection, I could easily do that with 3,000 to 5,000 meters to find, to discover another Rotten Stone, and then developing that out into something that's of significant tons and grade. Well, that's going to require its own 10 to 15,000 meters, just to put a size to it, to put a ribbon on it, and say, here you go, here's a potentially economic deposit.
Right, but what I'm thinking about is why not do 12,000 at Go Sugar and then do the 3,000 so that you have some high grade, attention grabbing headlines, raise the price, raise on the back of a higher price, and then go back and prove up the size. Like, why is that not the corporate strategy here?
That's a really good question. I think. Sorry, I'm going to go off on another wild tangent here, but this is kind of the beauty of junior exploration. I started with a big company. I started with Inco, and you're kind of tied because you gotta stick to the game plan. But, you know, one thing that I've learned through my career is, and I think the part that I really enjoy is that ability to be able to pivot. That, you know, if suddenly there was a change in the market, you know, and suddenly we felt, you know, hypothetically again, you say, well, let's just say we're very, very pleased with ourselves after 12,000 meters at Go Sugar. Yeah, okay, well, let's go a little further up the road and drill 3,000 meters at Rottenstone. We have a camp there. I mean, and you know, we've spent enough money there that the entire package, the whole 90,000 hectares, is in really good shape in terms of assessment required. So there's no panic that we're going to lose any of our ground. You know, our project Geo, and I think we love both these projects, but I think because I've been at Rottenstone a little bit longer than Go Sugar, that might be my favorite, and I would like to get back there sooner rather than later. Depending on how things play out, maybe we could do such a thing. Maybe we just pivot a little bit and go have another stab at it. And certainly with, you know, what's going on in the neighborhood, it's garnering some attention, and who knows what possibilities could come of all of that. We could find ourselves back at Rottenstone a little bit sooner than later. Who knows?
You're not thinking, let's just go there and poke like one hole to see if we have the same luck as this one.
No, I wouldn't have the confidence to just go in there with one hole. No, I would, yeah, I you know, give me another 10 holes down there, and I think I could, you know, we collectively, I think we can do some damage.
Better lucky than good, I suppose. You can always get lucky and stumble on, you know, 100 grams of gold or something like that. Okay, so we're thinking, how much money you have left right now? March, it was 1.4 million in cash. There's been 3 months, so what, $500,000-ish?
Our most recent corp deck, what we're calling the June corp deck, we're in and around $1 million, and
Okay.
we have boots on the ground right now, and when those final bills are paid, we're going to be a little bit under $1 million. We have enough to, you know, keep the ship afloat, if you will, on a corporate, you know, general, you know, the cost of keeping a public company alive. We've got a runway of about a year, we think. But the next round of drilling, and certainly when we get into camp construction at Go Sugar, what we have in the treasury right now is not sufficient. And in the case of the camp, we don't want to spend our slush fund, if you will, on the camp. That will be part of another raise.
Well, you say about a year of runway, but to my calculations, based on the March, the quarter that ended in March, you were doing 150 grand a month. So my calculation, under $1 million would be 6 months. Are you looking to cut G&A?
Well, we're always, I mean, but there's not a lot of overhead, so maybe I was a bit optimistic with a year's worth of runway, and we're probably, yeah, you're probably right, Antonio. I would, let's call it 6 months,
Okay.
6 to 8 months, yeah.
Right. And then after that, so you have 6 months, then you need another 6 months basically to cover the 12 months where it's going to be the drilling, which is going to be rounding up to $1 million, 6 million of drilling, $1 million, and then the camp build. How do you raise all that capital at this market cap, basically? I mean, do you go for, what's the strategy? Do you go for flow through? Is there anything else that you can do in terms of, I don't know, some creative financings with some of the projects or something? I don't know.
Lots of answers to that question. First off, I want to remind me to discuss flow through, please.
Sure.
But first off, you know, we're a junior explorer, and we are not going to be a mining company. So having said that, we have had discussions with the major mining companies. You know, we're in discussions with the seniors. We're in discussions with mid tiers. We've had discussions. Some discussions are ongoing. In the last little while, we've been approached. You know, the phone has rang. I went, oh, well, I wasn't expecting that. so these things, it's up to us to keep these discussions going, and it's up to us to be creative. It's up to us to listen to all possibilities in terms of financing, in terms of moving both projects forward. So the door is wide open. Our ears are wide open for any sort of avenue to finance this thing. Where we are right now, we're working very, very hard, and we have mechanisms in place that, it's probably best I don't get into full discussion about them, but we are trying to get our price up. We're trying to get our price up into the teens so that we can visit the financing. We're gonna need to finance. We have to keep the momentum we have at Gosher. We got to keep that going. So we've got to do a financing, and we would like to do a financing north of. I'm just going to say, if we could get to 12 cents, that would be absolutely brilliant. And then we could take advantage of a charity flow through. So we are very, very busy looking and have had tremendous conversations with a lot of non-Canadian based investors that could very well fill in the back end of a charity. And if we get a little bit of a delta on the front end, that's a little bit less dilution with respect to shares required for the next round of financing. So this is in a perfect scenario. That's what we would like to do for this next financing.
I understand, and I appreciate that you have to be political about how you frame potentially getting a major involved. But just to clarify, you're thinking a combination of asset level and equity level dilution, basically, that you're going to need to do to raise that capital.
Well, I don't think the asset dilution yet, but this is a perfect case scenario that we've discussed openly. And again, going back to Go Sugar maybe being the quicker path to the ribbon, and demonstrating to somebody, well, here you go, you can take it from here. There's a liquidity event, and then we dump all that capital into Albert Lake. Or, maybe, again, like I said, we're having all kinds of discussions, maybe we can entice a partner into Albert Lake so that we can go and drill those holes sooner rather than later using somebody else's money. I mean, these are all things that, you just have to keep your imagination wide open to possibilities.
Right. How far is that? Well, I suppose that some sort of a financing is going to have to come, again, as you said before, September. Raising during the summer months can be challenging. Is that something you're already strategizing around?
Yes, and acknowledging that the summer blahs can be a problem. But again, just with our marketing efforts and particularly with European-based investors and some American-based investors, there's a lot of interest in what it is we're doing. And so, getting away from I just reminded myself, let's have a brief conversation about the flow-through funds, or the flow-through mechanism. Yeah, I mean, we need to be careful with that because they tend to have, in not all cases, I got to be very, very careful about how I say this because I had discussions even, as early as this morning. They don't all come back at you. There are some that do, but not all of them do. And so, going forward, there are benefits to a retail investor to buy flow-through shares, but we as the company looking to raise money, we want to entice people to come along for the journey. And it's not just a tax incentive. There's potentially a bigger prize here so that you get, the best of both worlds. You get your tax benefit, but you're also potentially going to be part of an ever growing company and a company that's going to potentially have two resources.
That's right. Finding those right people that are not going to turn around and sell you down in 4 months, or if it's a life financing, even worse, I suppose, is key here.
Yeah, that triggers right away. Yeah.
Yeah. But so basically that's not something you'd consider then. Is that what you're saying? Or I mean, if push comes to shove, you got to take it, you take it.
Well, here again, right, you're at the mercy of what you can get out of the market, and
Mm.
sometimes you need the money, you need the capital to drill. Again, I guess the safest way to answer that is it would have to be considered, but Doug and I are more aware of all the potential consequences, shall we say? Yeah.
Hmm. Do you think that with whatever's happening with your neighbors, that's going to attract a lot of attention from the larger companies to, again, talking about the region as a whole? So we're not talking just small land packages or on a company base, because it's a bunch of small companies doing some work there. But do you think that a major now starts paying more attention to the region? Is that likely?
Yes, absolutely. And I could go on for a long time on that particular topic. Saskatchewan is underexplored. It's very, very much underexplored. And the potential for Saskatchewan is high. There are a lot of things to be discovered in the province of Saskatchewan. So I think the majors are paying attention. They're watching us. And if I can sort of spin off in another direction, and let's just say focused on critical metals, not gold for the moment, but critical metals, and just say nickel. The LME was flooded with Indonesian, Chinese, whatever you want to call it, nickel. And at a recent conference, in New York City, the takeaway message, I can sum up the 2 days of discussions in a very short sentence. North America needs its own supply of nickel. So where I'm going with that statement, Antonio, is the majors, and let's use Vale and Glencore and Sudbury. They've got smelters. The smelters aren't running at 100% capacity. The Sudbury ores are deeper and deeper and deeper and more costly to get out of the ground. So there's two smelters there that are going to need feed. So I think this trigger point, this how quickly majors are getting involved with junior explorers, and I could be completely wrong here, but this is just my gut feeling. Maybe that window is becoming a little bit shorter. And if you have a good project and you do your job well, I think they knock on the door a little bit sooner than they used to because of this impending supply crunch, this need for North American magmatic nickel.
Hmm. At what stage do you go to governments and start lobbying that way, though? Is that too early?
Well, it's interesting what's going on in the U.S. The Department of Defense has got a carte blanche to start spending money to secure, whether it's rare earth elements or whether it's what falls into the critical metals. So the Americans are waking up, and our government here in Canada, yeah, there's some grants in place, but why are we giving money to Rio Tinto to do an enhancement at a smelter? Why don't we get this money filtering down to the people that are going to find it? That's going to be the first part of the supply chain. You can't have a battery factory unless you have the contents to put in the battery factory. So with respect to the Canadian government right now, we're not down at the ground level. We're somewhere in between thinking, build it and it will come. So that hopefully that's going to change, and then we can start tapping on those doors, and there'll be funds made available.
Yeah, I'm in that mindset. I recently interviewed Talon Metals out of the US, right? They're getting a bunch of money from the government too. Yeah, it's interesting and there's not much going on in nickel land right now anywhere really but Canada. I mean, you have Magna. I interviewed Magna too a couple of days ago, or last week actually. And something's happening there, but yeah, the government's going to have to start moving sooner or later, and preferably sooner than later, but yeah.
Well,
Good.
there was an interesting announcement out of Ontario. They're finally going to start building roads up to the Ring of Fire. Hooray! You know, this is good. This is really good. So we can start, you know, the Eagle's Nest that oh shoot, Wailu out of Australia bought. You know, there was a bidding war with BHP. There's a perfect example. And that's not a huge deposit. That's not a huge deposit. So if Rottenstone turns into something of similar grade, you know, not necessarily as many tons as we're potentially going to develop at Goshagar, then, you know, you see yourself in a bit of potentially a bidding war if all goes well.
Yeah. Again, with the forward-looking statements, but what do you got to do about it? Geologists are hopeful by nature. So,
I'm
no,
not
and
doing my job if I don't get a little bit optimistic.
it's true. Yeah. I appreciate this overview. It was a very in-depth conversation. I think I've been through most of the stuff, but I'll be following along as you move along. So hopefully we can keep having these conversations. What am I forgetting to ask you? What did you come here hoping to talk about that I'm not bringing up?
Oh, geez, I don't know. I think you did very well of pushing all my buttons, and yeah, you're an hour and 22 minutes. Excuse the length, but no, I can't think of anything because you pushed all the right buttons, Antonio. Terrific.